Good morning, traders. Anthony Crudele here. Welcome to NinjaTrader live in Naples, Florida. We have a great panel for you as usual. We got my boy Jimmy Cagnina hanging out on the East Coast, Charleston area. I've never been to Charleston, but of course he's our senior market strategist. We're going to get a lot from him today as we have FOMC day and we have oil data. We also have our senior economist, Tracy Shuchart, aka Shy Girl. I call her Shy, so if you hear me say Shy, that's why. And we have the lovely Tanya in from New York, independent trader and content creator. I'm going to start with you today, Tanya. We've got a lot of time before FOMC. I just want to know what it's been like for you. Is this your first time to Naples, Florida?
Yes, it is. And I'm loving it, honestly. I've been to Florida like probably in the past 15 months. I've been here to Florida like I think this is the seventh time actually. Like
Really?
it's been a lot. Yeah. And mostly I've been to the other coast, the East Coast. So like Fort Lauderdale and Miami area and West Palm Beach. Yeah, it's very different on the West Coast, I would say. But it's more relaxed. I've been to the downtown area yesterday again, and it's very nice and relaxed. Honestly, it's a different pace than New York City for sure. Yeah, and I was saying like I stick out like a sore thumb on the streets because no one here wears black apparently. Like everyone's just wearing these white and bright loose clothing, and I was like wearing all black, and I was like, okay. I actually stopped at a boutique. I got white pants the other day. But then I felt better. And then I went to the botanical garden yesterday, actually. You guys have a really nice botanical garden.
I've heard it's great. You know, I've been here for 15 years and I've never been there. It's
Oh
funny.
boy, you should go. It's really nice. It's like 170 acres. And
Is it that
yeah.
big?
It was huge. I didn't even know it. I started just wandering around and then I got lost. I mean, whatever. I made my way back and I was searching for a gator. There was swamp area and marsh area. I couldn't find one. I haven't seen a gator yet.
You don't want to see a gator.
Yes, she does. I see them all the time.
Right? Are they? Well, how close can you get to one without it being like attacking you?
Pretty close. You know what? I've seen many on the golf course, and there's been a couple times where like I remember. I mean, just literally probably a few weeks ago, I was on the side of a bank. There was a trap. There was like a bunch of traps. I was just in front of the trap, and I remember I'm like, oh, there's a little area, and I'm like, let me back up to kind of see where I was going to go. It was right out of the outside of the green, and the gator was standing right there. I didn't even see him till I was maybe from me to Shy, me to you. That was it.
Oh
He
my
just looked at
gosh,
me. He's
okay.
like, hey, dude, you're gonna be a tasty Italian boy. You keep getting closer. But no, he didn't. He didn't do anything to me.
They're fast, though.
They are fast.
Yeah.
But
Yeah.
I've never.
Hard pass.
Yeah.
Happy not seeing one.
Yeah,
I saw a
Tracy.
tortoise, so I'm happy.
Oh yeah, you know what? I saw that picture. That's right. It was late
Yeah,
last night. I
yeah.
was watching that. We have a ton of turtles there, all different kinds of turtles too.
Yeah, that was cool. It was just like crossing the street, the road in front of me, and I was like really still. And then I watched it. Like, yeah, it was a giant. It was a pretty big tortoise, honestly. So at least I didn't see a gator, but I saw a tortoise, so it's still a W. Yeah.
I think you're gonna see a gator before you leave. I think it's gonna happen.
You guys have a lot of golf courses here, actually.
There's so many golf courses
Yeah.
here. It's crazy. I mean, it's funny. When I moved here, I didn't even play golf, and I got so bored here. I said, you know what? I need to start picking up golf, and it's like become just a huge part of my life because it's really there's dinner and Naples midnight's 9 o'clock. You know that too, right? You can't get anything after.
The restaurants close at 9 p.m. I was so confused. That's what I eat dinner sometimes. Like, okay. Yeah, same thing with me with golf. Actually, I didn't start golfing until I moved to my new building and they have a golf simulator in the amenities. So I was like, okay, might as well get used out of this and see how it's like. And then, yeah, now I've gotten pretty far. I got some lessons, and then like last time I was in Florida, I was on the course with some of my friends, and we did a 9-hole, and I got a par on the last hole, which was crazy to me. That was my first time on a golf course, so I'm hooked now.
It's an addiction.
Just takes one good swing to get hooked, and yeah, I've got it.
Oh man, Jimmy, you guys have Crocs by you down there in Charleston, up there in Charleston?
Oh yeah, yeah. Especially so, there's an island right next to me called Kiowa, and there's again a golf
I
course
gotta play
place.
golf.
It was awesome.
Yeah, and they're you got to be careful you don't step on one. They're everywhere. So,
Oh, that's funny.
but you know,
Hard
as
pass.
long as whoever you're with, whoever you're with is walking on the inside of you, and you can run faster than them, you'll be okay.
Oh no.
Thanks for that one, Jimmy. I
That's what
know.
they say.
Shai, we'll go to you. I mean, it's a light day until we get to later in the day. We've got FOMC, we've got oil data. Maybe just give us a preview. I know we're going to talk about it probably a lot before we get there, but as everyone's getting their coffee this morning, kind of give us a preview of what we're looking at today for oil and FOMC.
So oil data is at 10:30, we'll be back to announce that live. We had an API build, which API data is highly flawed because it's a voluntary query rather than mandatory reporting to EIA. But they showed a huge build of 4.6 million barrels. Expectation is plus 800,000 barrels. So we'll see what EIA data comes in at. Often they are two entirely different stories between API, and that's why I call it crappy.
Crappy eye? Crap AI?
Yes. So we have that coming up at 10:30. We'll be live on that. Then we have obviously the Fed today. FOMC is expected to unanimously hold rates steady for the second straight meeting. If you look at the CME Fed Watch tool, there's only like a 1% chance that they're going to cut rates. So I don't think, I think that what we're really going to need to watch is it's going to be all eyes on the presser today and whether he's hawkish or dovish. The Fed's two mandates are price stability, meaning keeping inflation in check at around 2%, which is just a random number that they pulled out of.
Yeah, they don't even really state.
It's like it's a made up number, and maximum employment, which means fostering conditions that allow the maximum amount of people to have jobs without causing runaway inflation. So far, employment data looks fine, and we do have inflation coming down at 2.8%. If you cut out energy and housing and stuff you actually need, and it's at 2.8%. So that is still coming down. So again, the Federal Reserve, we don't really know what the impact of these tariffs are going to be yet because they haven't really gone fully into effect except for aluminum and steel tariffs. So, even though economists think that this is going to be inflationary, it's not showing up in the inflation data so far, and we haven't really seen the effects of it. So again, Powell is expected to hold in a unanimous decision. So we'll really need to be watching the statement changes. And we'll talk about that at the 2 p.m. hour. And then, of course, at 2:30 p.m., we have the Powell presser. So will be interesting to hear how his tone is exactly. But I'm guessing it's going to kind of be a wait and see because we don't really know how tariffs are going to affect the economy.
Yeah, I'm sure he's going to get bombarded with tariff questions today.
I don't know if you guys. I don't know if you guys saw that Nick Timmerhouse had a pretty cool article in the Wall Street Journal this morning, and about maybe the Fed may pause their tapering of their balance sheet because they're concerned about the overnight lending markets, and they want to have enough liquidity there. So that's going to be something that's going to be interesting to me to see if they actually pause their balance sheet runoff, they call it.
Yeah, I'm looking forward to this afternoon seeing you're going to be on with Shai right as the data comes out. And then, Shai, you have Tony Nash today.
Yes, very exciting from Complete Intelligence. And he's a good friend of mine. I've interviewed him many times. He's excellent, and he's great on the Fed. So looking forward to talking to him and seeing, what he thinks about all the data.
Yeah, I'm looking forward to that. And just to kind of highlight the rest of the day, we've got Trader Kane coming on today. He's going to be trading live today, which is exciting.
I'll be watching that for sure.
Yeah, that's gonna be good. And then we've got PAX in studio with me and Tanya for pre-FOMC at 1:30. That's going to be fun, Tanya. You haven't met Pax yet, and he's
Max is awesome.
I've
He's a
heard
hoot.
so much about him,
He
and I've
is
been
a
following him
character.
on Twitter for like years, so I'm excited.
Oh, he's a hoot in person too. He's kind of a giant too. He's like 6'3", 6'4". He's pretty
Okay.
tall, and we will have a lot of fun. We'll have a lot of laughs. That's at 1:30, and then FOMC FOMO. We've got Jared Tendler with me and Trader Kane at 11.
Oh, fun.
So we're going to do
Oh.
a trading psychology segment today. So once Trader Kane is done trading
Jared's the
at
best.
11, it's going to be me, him, and Jared Tendler just talking about FOMC FOMO. And I'm curious to see what Jared is going to bring to the table with those questions and talking to me and Trader Kane about that. So that we've got a lot going on, obviously, before FOMC. Tanya, for these days, you've got your stream. I'm curious, do you still go back and stream? Do you just take it off? Like, what's your
Yeah.
process on a Fed day?
When I was like a beginner trader, I would just take the afternoon off, and I would literally to force myself to do that. I would book like a doctor's appointment, a dentist appointment, get some errands done to force myself off the screens when I was just a beginner and I didn't really know what was going on too much there. But now I have a process for FOMC where I feel more comfortable. I'll typically wait until 2:30 until Jay Powell starts speaking. Like from 2 p.m. to 2:30, I'm just watching price. And typically I'm watching for, there's a couple things that could happen on FOMC. Most of the time, there's like two manipulations I've seen. There's like two fake outs and then the continuation. But sometimes, it really depends on what he says. Like sometimes he could say something totally out of the blue and like it'll just straight go up, straight up. Like let's say he cuts rates today and you said that there was less than 1% chance that happens.
Yeah, exactly.
Then, then it's more likely that the market just goes straight up. But really depends on what happens there. But I'll always wait until 2:30. You can see right at 2:30. As soon as he just says hello, good afternoon, everyone, like just the algos just start.
Literally when he says morning, afternoon,
good afternoon.
good afternoon, literally the market moves. It's hilarious.
Yeah.
I watch it every time.
How much of his statement is released?
The whole statement is released beforehand.
The entire statement's
So-
released, but it's embargoed, right? Like no one could obviously.
Yeah, it's
talk about it.
embargoed until
Embargoed.
embargoed.
But right when he
everybody
says
knows.
hello,
I know, but everybody knows. So it does come out. His whole statement does come out, and it's really depends on the questions from reporters.
Right.
Yeah. It's funny.
I think
it's
Nancy-
like,
I
It's
think
the
that-
same thing every time sometimes.
Of course,
Could I?
Fed's
This might
mandate
be.
is price stability and maximum employment.
You think Nancy Pelosi
Go ahead,
gets it
Jimmy.
a minute ahead of time? Do you think Nancy Pelosi gets it that minute ahead of time?
For
For
sure.
sure. For sure. Yeah, I mean, and that's what makes it so difficult, right? Because it's like the machines really take hold during that time. But, I do think if you really sit back and you're patient and there isn't really any breaking news on these, going back to what you said, Tanya, there are certain tendencies that tend to repeat themselves during these types of days. And if you're, a newer trader, I don't think you should trade it. But like you said, if you've been through the motions and you've seen these types of moves, you just trade smaller and you wait for sometimes. I mean, sometimes you get these prices, on the wish list,
Yeah.
like you're like, oh, I was waiting for this area. You get there and you peel a couple in, you work your stops in this. And if you get tagged, great. But if it turns into a runner and you see that there's nothing new breaking news that's changing and it's just market movement and just getting whipped around, sometimes those turn into pretty good days. But you got to be really, really patient on those types of things.
I agree.
So, Jimmy, we're in just a minute here. We're going to be coming up to the first edge report of the day. Chart-wise, kind of preview us what we're going to see, and then I'll let you go right into your charts. Like, what is there anything overnight? Is there anything that you want to kind of talk about this morning that's caught your eye?
Well, yeah, everything's kind of muted so far today. The one market that kind of like Shai opened my eyes to yesterday was platinum. We're down about 1.5%, give or take, on a daily chart so far in platinum. But that's the only thing that I saw that was like, out of the ordinary, right? Everything is kind of in this pause, hold, wait, boom, 1
up and
o'clock,
wait.
2 o'clock.
Yeah.
All right. Well, I think we go to the Edge report now with Jim, and Jim, take us through some of these charts, and we'll catch you on the backside of it.
Yeah, sounds good. So that was a fast break. Uh, yeah, so right now we're looking at E-mini S&P chart. And by the way, we have Fabio also from MenthorQ coming on to talk to us about his Q score. He gives us the gamma levels, high vol levels that I'll show you in a second. But he also has this new thing called the Q score, which is pretty good. It kind of scores each futures market. We're going to talk to him about it. He'll explain how to, what it means, what the calculation is, and all that stuff. But right now on the daily on the E-mini S&P, yesterday we had what I guess Dan Gramsci would call an equal and opposite candle, right? This is a daily chart. So we had a big green candle, right? The body of the candle is green, well below all the moving averages still, except for that 8 EMA, which was kind of positive. Well, yesterday then, boom, we had a big red candle. So I misspoke. That was 2 days ago. Yesterday we had a big red candle, and the bodies were about the same size, and it was in the opposite direction. So we call it an equal and opposite candle. And usually, not always, but usually that's not a good sign for the bulls in this particular case. And an equal and opposite could be, could be red-green. This just happens to be green-red. Right now, we're sitting right on that 8 EMA, which I think I love that on a daily for a short-term kind of test on where we're at on price. We're sitting right on it right now. Just kind of drilling in a little bit. Again, we're in the June contract now. For the gamma levels, you're going to see difference between the June and the March contract. I know we're trading June, but you're going to see a little bit of difference, and there, you see a separation in price, right? So we're about 51 handles price separation between the June and the March. This should converge by Friday. Lately, this gap has been pretty big longer into the roll, but after Friday, it's game over anyway for March. So I'm looking at the June right now, but I want to be able to toggle back and forth to June and March and look at those levels and do kind of a mental calculation between the spread and what the difference is, especially with respect to some of the JAX levels or the gamma levels that aren't the primary ones, right? So JAX 1 is the biggest gamma level we look at, and that's at 5,700 right now. That's an even number. That's going to be the same everywhere. But when you get to like JAX 3 at 5,675, that gives us a nice area of interest that I'm going to call it. And the interesting thing about JAX 3 today is we're right at a point of control, right? This is the volume profile, which our boys from Order Flow Labs love, by the way. So I'm digging those guys. They're singing my tune. But there's there's a secondary peak here of volume. This isn't the primary peak. This isn't the point of control. But there's a competing point of control down here right at JAX 3. So when I'm thinking about range-bound trading, I'm thinking about, all right, that's a target. That's a target for me. Either if I get short and I want to kind of, get a quick few points out of it, that's a target. Or opposite, right? You want to get long, you want to use that as your stop level. So that's why I'm kind of digging these gamma levels. They're pretty good in most of these commodity markets. So moving over to, let's shoot over to the micro NASDAQ. It's down 70 right now overnight. It's pretty similar. Down 70 is like down 10 in the E-mini S&P. My charts are not cooperating right now. Hang tight. There we go. So a couple of other areas in addition to like the gamma levels are these high vol levels, right? In this particular case on the NASDAQ, the high vol levels, that blue line that you see up on my chart, it's right above the pivot. And when I see a high vol right by the pivot, that kind of gives me two areas of interest that are really close. And remember, when you're trading, everybody knows this, when you're trading the micro NASDAQs, you get these crazy wicks, right? You get wicks galore, I call them. So you got to be careful. You got to be careful where you place your stop. But these give us some kind of general guidelines on the upside right now, what we're looking at. These high vol level and the pivot, both at the same place. Love both of these levels. And then you got that JAX 1 level down at the 19,500 level, which isn't surprising. Nice, even number. So again, pretty sideways, though. It's not, 64, 65 point move in the micro NASDAQ is like a nothing burger usually. It's, there's no radar screens going off. Shooting down to crude. Let's check that out. 66 handle right now. This is, we're below 70 for a long period of time now. Right now, we're kind of, I don't know, we're kind of sideways bound. This is kind of normal kind of wave action so far in crude overnight. I like to look at crude overnight because it's really a global marketplace, more so than maybe some of the other markets that we look at. But again, look at this high vol level. Oh, this is the zero DTE high vol level. We just tagged it. We just hit it. Boom, and we came back down. That's what, again, I don't, there's a little bit of a mystery on why this works this way, but it really does. It really does. So these are some areas that I'm looking at. Jax 1 is way down here. Really nice point of control so far in crude oil, almost a normal distribution. The bias is a little bit to the north side. But the point of control is right by the longer term high vol level as well, 66.50. So we'll see if that's going to hold as support or not. Nice kind of move up so far. Moving on to my favorite. Let's go to the 30-year Treasury bonds really quick. 30-year Treasury bonds really quick. And again, not a lot of movement today, not a lot of range yet. Pivots in play for support right now. We have previous sessions highs up here. I do expect a little bit of movement as we go forward here with the FOMC. This market should move a little bit. I like this market more than the 10-year notes because your average true range is a little bit bigger. It moves more, and there's plenty of liquidity. Now it's not like the 10-year note where you have 355,000 contracts traded already today, but there's 60,000, right? And so it's a good start. It's very liquid. It looks good on the trading ladder. And this thing tends to trend, right? It's not like it doesn't move is like a micro Nasdaq where you're just bouncing all over like a Jiffy Pop, like popping popcorn. It's kind of more of a consistent, smoother move in general. So in any event, we'll take a look at that. This will be interest rate sensitive, Powell sensitive as we go forward. And just to put it in perspective on a daily chart, really all of the longer end of the yield curve has kind of been sideways, right? We have this really nice support here at 116 in 1730 seconds. And it's just, it's been going on for a couple of weeks now. So we'll see if we break out of that or not. On the upside here, I'd see almost 1800 is a nice area of resistance up here. I should draw another rectangle. I'm remiss in not doing that. Apologize for all you rectangle fans. So that's the hamburger bun right now. There's the meat in the middle. And all the moving averages are getting pretty tight, right? They're getting pretty tight together. We're going to have a little bit of a bowl of spaghetti maybe if they start crossing around. But from a longer term point of view, we're right at that 1% retracement on a fib. So I'm not sure direction right now. I don't know, right? I'm going to be totally open-minded today on the treasuries. The other thing I wanted to talk about, I think I still have some time, is my fear indicator. And I know a lot of people look at the VIX and other things for fear, but I like to look at the Swiss franc. Right. Now, remember, the Swissies, these guys, they're talking about negative interest rates at the Swiss National Bank. I mean, they probably won't get there again, but they did get there in the past. But, when you compare the interest rate differential between U.S. and Swiss, you wouldn't expect folks kind of flocking into the Swiss franc. This is a daily chart we're looking at right now. So when I see that kind of relatively big move in the Swiss franc over a relatively short period of time, this is definitely, in my mind, kind of a fear index, a flight to quality index. And what I expect to happen, all things considered, if we get back to, we kind of get out of this area of uncertainty with tariffs and all this other stuff, I would expect this to kind of come down a little bit. I think it would sell off. But right now, it's pretty positive on the upside. So that's pretty much what's on my radar screen, Deli, for today, and we'll see what happens coming up on the open.
I think we're back. All right, everybody. So, well, thank you, Jimmy. We were having a conversation in here talking about Jim, and I got to tell you, like those MenthorQ levels on oil are pretty incredible. I was just talking to Tanya about that. How can I forget my boy Fabio coming on today, following me, Jared, and Kane for the FOMC FOMO? We go into Fabio MenthorQ with Jimmy. Really stacked today. And I'm going to tell you, everybody, I would definitely watch that Fabio with MenthorQ. He's from MenthorQ with Jim today because we talk about expanding into other markets. I will tell you this. I've been watching his gamma levels in oil, just as Jim just noted. on a regular basis, and it's pretty incredible how well they've worked. I'm gonna give we're gonna give them to Tanya to take a peek at too and see what she thinks, and we'll get back to her in the coming weeks after I know Tanya is gonna do some homework and research on it, and she'll tell us what she what she sees in it. But so couple things. We don't have data today at 8:30, as we said. Everything is focused later in the day. Shai, a couple things I want to talk to you about. Let's start off with just Putin and Trump. I mean, they met. Like, what's the story with that right now?
Right. So Putin and Trump spoke for about 90 minutes yesterday. Putin agreed to this 30-day halt on energy facility strikes, but not a full ceasefire. We did see oil pull back on that, not unsurprisingly, because there's been, Russia's been attacking energy facilities in Ukraine, and Ukraine's been attacking oil depots in Russia. So with that, we saw oil pull back with that risk kind of taken off the table. Apparently, there are going to be more talks, and so we're holding on for that, and we'll see if this halt works and facilitates some other kind of peace deal, which hopefully it will.
Got it. And another thing I want to bring up, and then we'll get to Tanya. I want to talk to Tanya about triple witching. But before we get to that, I want to talk to you about the bearish yield curve. I mean, we're seeing a lot of macro people talk about this. What's the story there?
So the yield curve has taken this bearish turn. That's the 210. That just means that yields are narrowing between the two. This has some investors concerned, particularly oil watchers, because analysis sort of suggests that changes in the yield spread between the 2 and the 10 lead oil demand growth by about 12 months. That's been narrowing. So if history is a guide, oil demand growth could follow the 210 lower for about 1% for 2025. So again, investors and oil watchers are certainly watching this activity.
Yeah, I mean, it's something to keep an eye on, especially on a Fed day, how that thing starts to move. That could really lead into how everything moves.
Right,
I mean,
exactly. More volatility all around. So
yeah,
we'll see. We know that everybody definitely will be watching the yield curve for sure.
No, yeah, absolutely. Tanya, I wanted to go back to you about triple witching. I mean, it's funny. We hit everything this week with you here, right?
Yeah, it is a busy week here. Later in the week for sure.
Yeah, how do you approach a triple witching day?
Right, so triple witching is tough, right? Because you have three things expiring at the same time. You have the stock options expiring, futures contracts are expiring, and then also the futures options contracts. By the way, have you ever traded futures options contracts?
I trade them all the time. I
Yeah.
can't wait till we get them here at Ninja.
Okay,
And
yeah.
it's coming, everybody. We are getting options on futures at Ninja at some point.
That's
They are
cool.
coming. Yeah.
Oh, that's cool. I would be interested in that because I'm actually originally an options trader.
Really?
Yeah, and before I switched to futures, I was mostly trading I was trading large caps, and then I moved to just simplify my trading to SPY and QQQ. And then one of my friends suggested, hey, why don't you, if you're mostly trading the SPY and QQQ, then why don't you switch to futures? Because there's no theta and every tick value is always the same. And that's how I switched over in 2022. It's just way simpler. But anyway, yeah, we have those three different contracts expiring. I typically think that in the morning it could be slower, and then it really ramps up in the last hour of trading. It can be pretty volatile as everybody is getting out of their last positions and they're rolling over. But like I said, this week at the beginning of the week, got to take it slower, and just the start of the day on triple witching, it could be a bit erratic or it could just be choppier. Basically, yeah, this week I've focused on sizing down. I mean, I took one trade on Monday, right? And then I got stopped out for smaller sizing. And then yesterday I did my little pre-market outlook here, and we did go lower. We hit your levels too, which was nice.
Boomer.
And then
Well, then,
it was just in the first 15 minutes of the day, right? And then I was looking for maybe ES to catch up to a previous low of day, but it was we already dropped enough. I got stopped out break even on a trade. So taking it pretty slow this week. And then, the rest of the day, if you look at the 15-minute yesterday, after the first 15 minutes, we basically barcoded. So it's really easy to just get caught up in that chop if you are zoomed in too much, right? If you're zoomed in on just like the 1 minute, then that's where you can get caught up. And it's just, for me, it's just about focusing on staying true to my strategy and also just sizing down and also just waiting for when the higher time frame aligns to execute. Yeah, it's a lot of waiting. A lot of times I'll keep a note on my notepad so I don't forget, because sometimes you come in to the trading day, right? And you're like, okay, I'm only looking for longs. And then let's say it just shoots up without you, you're a retracement trader. And now you're like, okay, I want us to retrace lower to this level to go long. So now I'll short to that level. That's happened to me before. And then, oh no, I didn't follow my plan really. I just wanted it to go lower so I can buy there. So then I shorted. But the whole time I was frustrated because it's so strong, it didn't even retrace there. So it makes sense why that's a lower probability trade to begin with. So yeah, it's just about sticking to your plan, I would say.
Yeah, no doubt.
We have, sorry,
Go ahead.
break in really fast.
Got it.
We have oil titans uneasy over tariffs. They're going to meet with President Trump today. So the CEOs of all the major companies are going to meet with President Trump and I guess supposedly caution him about the potential negative consequences of his policies, meaning that drill baby drill policy trying to drive oil prices lower certainly does not help the industry. So I'm guessing, it doesn't say what time they're meeting today, but I'm guessing that there'll be headlines that will be moving headlines for the energy sector.
Well, stay tuned into the NinjaTrader network as Tracy will be on that. And no, thank you. Absolutely. When you call us out, if you hear something like that, it's another thing. Hey, just another thing we got to put on the board that maybe we got to watch today. And it goes back to what Tanya said, and I couldn't agree with her more. Just take your position size down, work your stops. If you have a level that you like, stay true to your plan. Just trade smaller. You don't need to chase this. There's going to be opportunities. I mean, once we get through this week, next week, I think it's just going to remain busy. One quick thing before we get my boy Farm in, because I know we're getting into tape talk here in just a second, what Farm is. And you mentioned this, and I want to bring this up when we get the Tanya Army in at 9 o'clock to 9:15. I want to go back to talking about that last hour and why I think MenthorQ with those GEX data matters so much, how those levels get pinned. And I've noticed this with zero DTEs. It's all in that last hour where like you could take your, all of your charts and kind of throw them out the window. It's when that options data really takes hold, especially on OPEX. So we'll get back to that at the 9 o'clock Tanya Army 15 minutes. Boy, does she bring in her. We love seeing everybody in here supporting Tanya, and so we'll be there right after Farm and I. But let's get my boy Farm in here now. Let's do a little tape talk. I'm curious to see. Oh, he's got Navy on. Here we go. I mean, you are just making
black.
this too easy.
Come
So
on.
we went. Oh, is it? Why you told me it was gonna be Navy. So okay.
Now tomorrow you're going to
how
think I'm
you
wearing the
doing,
same
my-
shirt. I'm doing well.
That's good, man. So you look at yesterday. You and I. We looked at the charts. We had similar thought processes. It worked out. I saw you talking about on Twitter, man. I got to tell you what, too. We've got the Tanya Army from the 9 to 9:15, and boy, do we have the Farm Army. And throughout the day, it was just a testament of how people respect you guys and just the time you put in. And Farm, it's like literally between messages from you or emails or what I seeing here on Twitter, it's like. You're around the clock, man. Your passion is really incredible.
Yeah, I've actually been sleeping a little bit more since we started the show, since I got to wake up early. But I just, I don't sleep that much. So 3-4 hours of sleep, and I'm usually good. And then I'll get caught up one day on the weekend. So I just kind of keep at it. And I've always had a habit of just peeking at the screens, and unless it's family time, of course. But once they're asleep, I'm just up. Talking to people and looking things over, and I've got a good group of followers that are very loyal and engaged, and I like to answer questions and banter a little bit. So,
yeah, I've been in so many rooms with people in this industry over the years, and there's a common element I see. I see with the people in the studio here, with you, with people that consistently come in here, the dedication in order to succeed in this business. What it takes. Is you got to love it. I mean, if people don't last in the trading world if they don't love it. but once you have made that commitment and you have that passion for it, you do find success down the road. It's just one of those things. It just doesn't happen overnight. It takes time, and that's why it's so important to really have that long-term plan. And if you want to get your short-term goals to really to get where you want them to be. Let's talk about some short-term charting today. Let's take a look at the charts. We'll start with me as we have been lately. I think maybe we keep that on the reg. I like starting with me and then having you come in and tell me what you see. So I'm going to go to the daily first here, Farm. This morning I put a quick note out and said I actually now have a bullish look on the ES for June. And the target's going to be 59.30. Now that's a ways away, obviously. But I want to go over and quickly explain that and kind of goes how it goes into my mindset. And I'm actually happy that it happened on a day like today with FOMC. So 5680 is my support. So what I look for is on my Boomer Bollinger Bands, and they're going to be Boomer Bollinger Bands forever now, Farmer. I mean, you know, the chat was blowing me up saying, oh, you know, they were saying, you know, Deli's is this old man. He's got, you know, these Bollinger Bands. I said, how about those Boomer Bollinger Bands the past few days? Anyway, let's hope that continues. So who knows? But nonetheless, when you take the peak Bollinger Band here to there, and you just do a basic fib, but you got to change your settings. You got 70 as red, yellow's 50%, blue is 30%. And what I look for is anytime volatility expands the way it did and the market starts going sideways, and then you see the Bollinger Bands come in, that's when you draw that fib and that 30% to 50%. So I boxed out that area. As long as we have daily closes above 56.80, I think we're targeting 59.30. Now, it's not, nothing's linear. It's not going to be a linear path there. Where am I wrong? And this is where I've moved more into a swing trader, is I only really look at longs intraday now, and I'll go to my 60-minute or even like my 30 or 3-minute as I take it down in time frame to execute. But as long as we have daily closes, I'm only looking at longs now. Now I may not hold it every one day from today to the day it hits there, but I'll rotate in and out of them, or I'll use some options along the way to be able to hold that. Where I'm wrong is a daily close below 56.80, then all of a sudden it could be a spillover back to lower prices, and the trend might continue lower. So it's for me, it's a simple way to look at bias of direction. I'm just looking at longs right now. Even today, I mean, unless the data is really, really, you know, bearish, and I go to Tracy and say, oh, this data's, you know, she's like, this is really bearish, Deli, you know, then I'll probably continue to look at any long opportunity I can get and watch for a daily close above 56.80 to confirm it. And quickly, when I go to the 60-minute before I go to you and your charts, consolidation patterns, what I see today. Yesterday, we talked about the shorts in the morning. Target was 56.96. Tanya had the 56.90-ish area, and then we were all talking kind of about the 56.58 area, and we'll go back to what you were looking at as well. We went down there, we held, we stabilized. Merritt traded great yesterday in the live. He caught shorts, and I think he caught longs. I think he caught both sides. So ultimately today, what I see is, what else can you expect going into a FOMC day? Not always, but a lot of times. Two-way tape, got a bullish bias. So we'll see what you think, Farm.
Yeah, I think today, you know, we've effed around for a couple of days, and maybe today we find out, I guess, right? I hope so. Break from this range, especially yesterday. Yeah, I mean, I have to say, I probably am slightly leaning towards up. It's very slight. And really something more I see on NQ. So I'll start with the NQ chart when we flip to mine. That just, I mean, there's a very, very clear line in the sand to me on NQ. And so I'm actually going to be monitoring what NQ is doing for my ES bias. And I think if you want to just distill it down to yesterday's range on NQ, you can probably do that, the cash hours range, right? And so, you know, we'll see what happens with JPOW. I mean, there's still a lot of overhead. But it does seem like we have an opportunity here to keep grinding a little bit higher. So I think, you know, if we get up to I think you said, what, 59.30? Is that what you said?
59.30 is the big picture target that I have, that I think, you know, I think typically they happen within the next week or two. So I know that's kind of a big move, but it's volatile. Yeah. But yeah, that's the target.
Yeah, no, I don't think that's unreasonable at all. You know, after such a nasty move lower to get a reversion back up there, I think I'm gonna have to sell that though, Crudele at 59.30.
That's
Like
that's
a
the thing.
lot.
Yeah, I agree with you. And that becomes
So,
that, I didn't even get to that point yet, but yeah, I'm with you. Like if it gets up there and it cannot get above there, that becomes a key pivot for me of whether
yeah.
or not trend is intact. So 59.30 to me on a big move higher, if we do get it, that's the area. If it fails there and comes back down, I expect a new low.
Yeah. So it looks like you got my chart up. So real quick on NQ again, what I found interesting about NQ is, we had talked about, I think it was Monday morning, the attempt to break from last week's, effective range, which, we did, the risks of getting sucked back in. And you could see, what happened with NQ, right? It sort of was trying to hold outside. Again, I'm looking left here at the prior weeks, all this volume, right? And then we just sucked right across to the bottom of this effective distribution here. And so on the old contract, this was like 400, 19.4. Now it's 19.6-ish, basically. We had some very good buying in like the 260s, 280s on the old contract. So, add a couple hundred handles there, for this contract. So to me, like this has to hold. And all this really did was provide an opportunity for potentially ads if you're long. And so, we had a bit of a liquidation at yesterday's open after the profile had been broken down overnight, and we'll drill in and get to that in a minute. But I mean, there was some fair buying. There certainly was not high time frame initiative selling to break down yesterday's profile after that initial move. So my slight lean has been ultimately a little bit higher, but it's very slight. And if we start puking this, I think it's got to be done for NQ. So I'll switch back to ES. It's a similar look on the weekly profiles here. Again, we got that attempted break from last week's range. Now this one did not suck all the way down to the bottom on ES, which I found interesting, especially since the Dow was like a disaster in the morning. It seemed like it just needed to find, I want to say it was Friday's open, maybe. Maybe it was Monday's open, I forget, before it finally found its feet. But all ES did is just suck back to last week's point of control and build more volume there. And so that makes sense to me ahead of a major catalyst, right? I mean, the market is always waiting on information. FOMC is a major bit of information. So just sort of, grinding along this high volume area from 2 weeks in a row, there's really nothing horribly bearish about that. And there still is some room to potentially break a little bit lower without, catastrophic, effects. But again, NQ is a little bit more at risk than ES. So, looking at yesterday, and we were talking about this with a little bit of banter on X. So again, in the morning, we had talked about how the overnight sellers broke down the prior day's profile very nicely. And I mean, like if I had to show somebody, like if I have $1 billion or $2 billion and I want to intentionally break down a prior day's profile, it's how I would have scripted it out. Like, okay, now sell here, defend. It was like a thing of beauty that I wish I'd been up all night trading that, but I wasn't. We got the puke at the open. And then again, all we did is suck to last week's volume point of control effectively and consolidated. And so we got this B-shaped profile. And so, yeah, yesterday sucked to trade if you're looking for big, clean moves, if you're looking for a follow through. But if you like to take rotational trades and just fade the edges, it was kind of glorious. I mean, there's different traders, different styles in the room that we have. And there were some that took like 7 longs, just basically long 57 to 60 up to 77, just peel off, 10, 15 handles, what have you, and then just get out and not expect it to break. And so, again, all this is just kind of building some volume after this puke. And so for sellers to accomplish anything, again, yesterday, they didn't. I mean, they had no interest initiating down here. So if we were really going to go lower, then why were high time frame sellers yesterday not interested in initiating down here to drive this and form sort of a new distribution? All it was just effectively balance after that initial puke at the open and went nowhere. So it's hard for me to be too excited on the bear side. We had an attempt to expand range to the upside that failed. I mean, there were fantastic shorts, right? You could have just sat short up here. NQ is the same thing. You could have shorted this all day and it would have been completely fine. You could have longed it all day. And then, overnight we get an attempt at range expansion to the upside. Because basically, if you can break away from this volume, some traders would have it as 81, maybe 81 to 83. Some might have had it at 80. But effectively, if you can sort of build a base above all this volume, then you can kind of retrace this move back up to yesterday's open. But if you fail to get those breakaways and then get sucked back into range, where do you go, right? We test the other side. So this is what we were looking for specifically overnight. You see this a lot after something like a B-shaped profile or a P-shaped profile, where you'll get an attempt at range expansion. It fails. We then take it the other way. And same thing, like you flip long if you want and take it back to the other side. So a whole lot of nothing yesterday and a whole lot of work to do today. And I really don't think anything that happens, I'm going to go back to the weekly. I don't think anything that happens really leading up to the meeting matters a whole lot. Again, just a little bit of FAFO. And so, we'll see what they say. I also don't really feel like there's anything horribly bearish that could come out from, I guess they could. It seems like things are pretty bearish right now, and we're pricing in, quite a bit there. So, maybe there's a bullish surprise, or maybe it just is a nothing burger and we get a little bit of all crush and a little bit of rally. But the key is going to be whether any kind of a rally that we get is sustained, or whether it gets sucked right back down. And then if it does get sucked back down, if there's any technical damage, same can be true. If there's any selling, does that selling then just get snapped right back up? But again, I'm really looking at NQ's low. So any kind of, if we're closing below yesterday's low on NQ, I'm not pressing the buy button probably for a little while.
Yeah, that's something we talked about yesterday. I think this market is very vulnerable when we break a prior day's low. It's like if you're long, I don't care who you are, even as systematic as many people may be, when it breaks a prior day low in this tape, psychologically, people don't want to stay long. It's a race to get out. You could feel it. You saw it yesterday on the open when we were starting to go lower again. It just feels effortless. And even though I got a daily bullish signal, I look at what you're showing me here. It's the same thing. It's like until I see stability above 5680, until I see price start to show that it can hold. And, I'm actually glad I got the signal on a day like today, because a day like today, let it work out, let it work itself out. Today, part of me looks at what you're showing me, what I was hearing from Tanya. We'll see what she sees on her charts, what Jimmy was talking about, what I'm seeing. Today could almost be quieter than yesterday, even though it's Fed day. It's very possible, right? It could be a churn day, where it's like it tries to do a lot of these things if we don't get really anything to break us away. Because it almost looks to me like on your chart where it almost needs to spend a little bit more time on the profile to build a base. And like you said, with the NASDAQ, it could be a NASDAQ breaker lower and S&P doesn't have it, NASDAQ ripper. There's a lot that could happen today. I expect a very choppy session for what I see, with a slight bullish because of what I have on my daily. But I don't know what you think about that.
Yeah, entirely possible. It sort of feels like, if anything, this is maybe one of the most well forecast FOMCs. I don't know. I feel like in the last couple, we've known
in our lifetimes.
Right. So I don't know. I know options. I think I saw like options are pricing in like some absurdly small move. And that's interesting.
Doesn't
I guess
surprise me.
if you do end up getting an outsized move, then I guess it means things can get interesting, right? And I don't know, I just don't feel like there's an outsized move to the downside. Like, what could they say at this point where it's like we just dropped 200 handles on ES? Like, I don't know what could happen there. Like if they put an end to QT and they revise stop loss or like whatever. I don't even know if they're doing a revision. I haven't paid enough attention to this one. Then maybe there's some kind of catalyst that's a little bit more bullish than we expected. And then if you exceed that options pricing, who knows? But there's just so much overhead. Like, I don't know. I'm just being very careful as we trade higher, scaling out of any longs on the way up, trailing stops. And then, if I am long and the thing just completely and utterly cracks down, then, I'll have to flip. But I usually wait until tomorrow to really see how the market is digesting an FOMC day personally.
Yeah, I've got something to say about that. And of course, execution. is always the key to any strategy. It doesn't matter what we think coming in, it's how we execute the day. We've got Tanya in just about 7 minutes, but I want to get to farm about a couple things before we get to Tanya. And listen, I need the farm army out there. Give us the thumbs up on YouTube. We're just getting YouTube live going. Farm and I are going to be on every day at this time. Not every day, Monday through Thursday. We need Fridays off, Farm. That's what it is. You and I, we can't bring this kind of heat 5 days in a row. It's too much, man. I don't know if they can handle that. So give us the thumbs up on YouTube as we continue to build the NinjaTrader Live Network. So Farm, I want to talk about two things with you. One is I put this tweet out years ago, and it was funny. I still get people going back and tweeting to it. It was one of those posts that kind of lingered. Day one is always the overreaction to the FOMC. Day two is the reaction to day one, and day three is where we really learn about what happened on FOMC day. And that's just one of those things that over the years, I have found myself in this whirlwind. On day one, I'm overreacting. Day two, I'm like, oh, we broke. Maybe, we keep breaking, or like we're like, and I go back to reacting to day one. And then day three, I'm like, oh God, now I see what's really kind of happening here in the market. And so I have formatted that in my own brain to think that way. That's like, I know today's the overreaction. And so a couple things that I think about is it could be a churn, where it's like everyone's just overreacting, or it, like you said, everyone's expecting very little and they look for that initial fade and it doesn't, and all of a sudden you're in blue sky territory, from where we've been in, and the thing just goes, or to the downside. And it doesn't have to be a headline, and all of a sudden it just happens, right? Because everyone's kind of either pinned the wrong way, and all of a sudden things start to roll. And then we've got 2 days before triple witching. And, you talked about options pricing a pretty minimal amount of action today. I think is actually probably a smaller range than yesterday, if I think that's what I've been seeing, which is, again, I could see that from what we're seeing in the charts. What is just your mindset going into FOMC? You got rollover, you've got triple witching. Talk to us about that.
Well, I'm definitely a bit of a boomer, so I generally don't trade events like this. I think I did once, actually, and this was like back in the spring or something like that, and it was the stupidest thing I've ever done, and like it worked really well. We shorted a pop, and it just immediately nuked, and it was amazing, but it was really stupid. But I usually don't mess around because, like, I don't know, I feel like I'm pretty decent at picking up handles when I need to. And so I just don't really see a reason to play around in some of that volatile mess necessarily, personally. So, but I do wait. I always wait and like to see, certainly, once the presser is done. But even then, like, you're still getting some, potential volatility crush on some days, and it could be misleading. And so I'm looking at other things, right? So maybe I'm looking at, in this case, lately, I mentioned I've been looking at twos, USD JPY. I think Jim was talking about the Swiss franc. Works the same way, basically. Yeah. And so I'll be looking at some of those other things to see how they're behaving, and not just at the index, right? Because the index could be lying, driven by passive supportive flows if we're driving higher. And so I'll try to see, if the move makes sense in the broader context of what else is moving in the market. And then I'm very much, I just really like to wait this week out. And so I'd be perfectly happy if the market did absolutely nothing and just sat here basically in last week's range all of this week. That would be fantastic. We get through contract roll, we get through FOMC. That would be amazing to me. And then we could just come in fresh next week. But that means it won't happen. So, because I want that.
And how dare they lie to us in the indexes, Farm? Yeah. While there's something else going on somewhere else that they would never do that to us.
Yeah.
But it's so funny and it's so true, because if you talked about earlier, Shai brought this up from a macro perspective. You see all the macro people out there now talking about the 210 yield curve becoming more bearish and how that plays into today as well. Like, all of a sudden you could be looking at S&P and NASDAQ and you're so honed into that chart and that 210 curve, just all of a sudden it makes everyone either bullish or bearish equities. And I know I look forward to Tracy later today when she's talking with Tony Nash. I'm sure they're going to cover that, especially right immediately following FOMC. It's extremely important. But last thing is we only got a couple minutes left. When you get into a Fed meeting, what are you having up on your charts? We talked about Swissy yen or other things, but just like what's the layout look like?
Yeah, in this case, I mean, first of all, I'm going back to my 30-minute. So I'm going to go to my weekly volume profiles. Like I don't even need to look at the 5 or what today's doing. I'm looking big picture, right? Because to me, your minor support from yesterday or something clearly doesn't matter on FOMC day, right? What matters to me is what the market is telling me within, weekly volume profiles, monthly volume profiles, yearly volume profiles, those big picture spots, right? And so, I had mentioned that the market often likes to try to find a home at a high volume node into a major catalyst. And so what you could see is a break from that high volume node potentially to another. And then we can look and see how price responds. So I'm only looking like the lowest time frame I'm looking at in terms of volume profile is a weekly, and then on like a 30-minute. And I want to see specifically how price reacts at these key high time frame spots, because that is what tells me what the market is thinking. I say a lot that price speaks to me. And, to me, with volume profile, it very much can tell a story, especially with these key events. So while I may not trade it, I will be extremely focused looking at both indices. I will take a look. I'll probably be looking at twos and probably USD JPY just because I have been lately. And I want to see if some of that fear creeps back in with anything that's said. And if not, then I'll start looking for different macro indicators for this next leg, whichever direction we move. But that's the biggest thing I'm looking for is a resumption of some of the same fear signals I saw. I'm looking how price behaves at super high time frame spots through the meeting, through the presser, and the next days. And that's going to tell me with pretty solid clarity where we're going next week.
Farm, I love it. Another great session with you today. Thanks for setting us up for FOMC. Tanya Army, get ready. We're going to be back in just a few minutes with Tanya, and then Trader Kane is trading live today. Hang tight, everybody. We'll be right back.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
Here we are. What's up, everybody?
Welcome back, everybody. All right. Well, we're back, everybody. So you guys probably heard me just doing sign language back and forth with Tanya. We were getting prepped for our segment. But so Tanya Army, if you're here, give us a thumbs up on YouTube. We're ready to rock for Tanya. I got to tell you, you guys bring the heat every day. We love having you guys here in the NinjaTrader Live segment with Tanya every day, 9 to 9:15. Tanya, without further ado, take us through the charts.
Yeah, here we are. Yeah, we were talking about the weekly earlier, I think with Farm, and I was just pulling it up, and it's pretty interesting. ES here is right at its weekly open. We pushed up, we came back down to around its weekly open. Nasdaq's a little bit red from there. Pretty interesting. So we didn't really have much movement since the start of the week. Like, we pushed up, we came back down basically, and I think I have that daily still marked out, that divergence. That's basically the only thing helping out the bulls right now. But, where we retraced on the 4-hour and we rejected, I'm looking at ES and NQ over here. We rejected this area with a wick. This is in a premium of this leg of this push down. And, the 4-hour continued bearish. We inverted this fair value gap. And also, like, even over here, we respected that one as well. So it's still looking quite bearish to me on the higher time frame. Although, it's the morning before FOMC. So we could have some accumulation like we did. Like in the morning yesterday, we basically had our drop during the first 15 minutes and then we just accumulated, right? Because you had distribution, which, by the way, you guys, I noted that we hit that previous daily low on ES and NQ. Well, on NQ before 10 a.m. I basically, when that happens, I anticipate the rest of the New York session to be accumulation, so just choppiness, because after you have a distribution, that's typically what happens. Like we talked about, it has to accumulate more liquidity, or like you said, even with Farm, like that's basically what I think about. Like you said, it needs to create more volume profile in those areas to even do anything. So, yeah, same thing on NQ here. That's what I was looking at. Like, this is a premium, which means it's above 50% of that fib from here to there, right? And
Oh,
then we
that goes
rejected
back to
from
what you
there.
showed us yesterday when I asked you that question the other day. That now
Yeah.
I see. I mean, every day I'm learning more and more from you, and why that makes sense to do that.
Yeah, so then you could see, like, for example, there's a gap below 50%, but if you were shorting here, maybe it would have worked out a little bit, but like, yeah, you would be under heat. Meanwhile, if you just shorted above 50%, even on this day, like I think I did short this day. I think this was CPI actually. Yeah, I remember. I was anticipating more downside there, and then I remember that 4-hour just wicking this. It took, partials along the way, then stopped out in profit that day. I remember that. But that was like a telltale sign for me. That wick above this high in this liquidity zone above 50%. That was pretty good. So again, we dug again. So now it's like 3 times up in these gaps, which could be a third drive. I wouldn't be surprised if we do head lower. If I go to the hourly there. So I think I talked about this during the morning. We have this intermediate term high. We have a short term high to the left and to the right of it. And also this is the one that rebalanced, repriced through that inefficiency level. And now you had like this break of a short-term low with displacement, right? So that's what I'm focusing on here. Probably just put out a fib to this one, right? And I wouldn't want to be shorting below 50%. I think, we could accumulate in this area and then potentially just come up into this previous low before the high, which would be a bearish breaker block. And that would be my point of interest. For continued bearishness, I wouldn't want us to really close above 50% of this series of red candles, the bodies of it. So that's what I'd be watching out for, honestly. So I think this morning it's a little bit tougher because of FOMC. But I think, we could go up into this zone, maybe during FOMC, and then if we're continued bearishness, I would want to see us reject here in this area, right? Or up to 50% of it. Otherwise, if we close above this candle, what would it be, around like 936s? If we close strongly above that, then I would hold off on shorting. But if I start seeing wicks up in this area, and then I go down to the 15-minute, because this is I would go down to the 5 and even the 1 on FOMC days. But if I start seeing a shift to structure bearish, then I would start attacking these lows. I want more, liquidity to generate here. This looks pretty good for these wicks and these relative equal lows here, if we're going to go lower. But yeah, I mean, this morning, good luck to Kane on his trading today, because I typically don't really even like trading like the morning of FOMC for those reasons. So if you look at ES, yes, same type of vibe there. Let me see. I do like that the indices at least are, in sync that way, structurally. And, on ES, we had that 4-hour FEG. I did note that I wanted it to draw to yesterday. We did pretty nicely there. But the point is, we closed below that. So that's quite bearish to me. Closed below. We just completely slammed through it. Now we're just accumulating more. I think that we could, same type of analysis as NQ, we could come up into around 50% of this wick here for rejection on the hourly, and then I would look for continuation lower. And I would just hunt these stops here, or I don't really particularly know about whether we're going to make a new low of the week. We could, honestly, and then that would definitely, the bulls would be in trouble there, right? Because we had this SMT, this divergence where NQ made a higher low here and ES made a lower low, which would be, if we're going to shift structure back higher, that would be the first type of indication of that. But, I haven't really seen much of that because we're not closing above highs with displacements on the 4-hour, right? We're just wicking above them and then coming back into the range. So I'm more bearish, and it's better for me to just continue following that trend lower. You can see on the weekly, we've had how many weeks straight of down? 1, 2, 3, 4 weeks of bearishness. We're on our 5th week now. Yeah, not gonna really go against the trend until it's confirmed. And for me, you have like maybe an inkling of that potential reversal here, that divergence, but again, like no follow through. If we started closing nice and cleanly above this, and if this made a higher high here, then I would be more inclined to go bullish. But here, we have an intermediate term high. This level is important for me, 5750s, 5760 for the coming weeks. Like if we start displacing above this, then I could potentially see us going higher. But other than that, like this high is, if we're bearish, we should not break this high now. We should continue lower. So it's looking quite bearish to me.
And I remember one time coming off the floor, and a buddy and I were talking. We're like, man, just when you think this market can't do something 5 days in a row, it does it 10.
Exactly. Like I never want to be like a contrarian too early. Like if you could be right, but you're too early, and guess what? Now you're
early's wrong.
Yeah, exactly. You're wrong, and the market can. What's the saying? The market can remain irrational longer than you can stay solvent. Yeah.
Perfect.
Yeah.
I know that's always a hard. It's like I know that quote, and then in the heat of the moment, you're always like, "Can I make sure you get it right? You nailed it."
Yeah, because people are. If you just start averaging down and down, doesn't.
Oh yeah, especially right now.
Yeah.
And I will say too, I think that I pulled up my chart as you were talking. The Nasdaq is definitely looks weaker to me than the S&P. The S&P, I got my bullish signal. The Nasdaq still got work to do to get it.
Yeah.
And another thing, you're going into a Fed with divergence. I'm not seeing it across all the indexes aren't looking super clean. If the Nasdaq starts to take a leg lower, I mean, I think it pulls everybody down. The key right now is the Nasdaq to really gain strength, because if the Nasdaq doesn't gain strength, the rest of the market's toast. Period.
I agree. It's always dicey if you're in a long position on ES and you see the Nasdaq is making a new low of the day. Then like you said, it typically pulls the S&P 500 lower as well. Yeah, like you said, it is looking worse on the hourly. You can see that NASDAQ displaced below these lows here too. And yes, hasn't really gone there yet, but I do like that we made these equal lows. So if we have a rejection here, I would target these lows for sure. Yeah. Because that looks like a nice liquidity level to me.
So we have a few minutes left. We've talked about it a little bit, but just thought process coming into today. Farmer and I talked about how execution trumps everything. You know that as well. I mean, that's just all what it comes down to. We're going to wait and see. Number comes out today. What's the thought process?
I'm going to wait until 2:30 until Jay Powell starts speaking. I'm going to let price do from 2 to 2:30. I just let price do discovery, and typically that's where you'll maybe see some manipulations and lots of wicks both ways potentially. And then I look for a manipulation. I stick to my strategy. I'll see if we retrace. It'll be great if we accumulate more up here, and then we have a manipulation where another jagged high gets put in. Like this, right? When I see those jagged highs, that indicates to me a reversal, right? And then if I see equal lows below, like here, right? That's the next liquidity level that I would be targeting. So just like right here, jagged high here, we have more equal lows here. I would like us to accumulate here, and then we manipulate these engineered highs, and then go lower. Yeah.
So a slight lean towards bearishness.
I am.
Yeah. Just because. If that sets up, that's just the direction you'd lean towards.
Yeah,
execution.
but like I said, yeah, exactly. But if we start closing above this gap here, and we close above 50% of this swing low, then I'm gonna wait and then potentially look for bullishness. Yeah, it's all about remaining flexible, but especially if we break above 57.50 in the coming days, I mean, then I'm definitely gonna, ride with the bulls on the way up. You have a lot of trendline liquidity here. You have more imbalances up here. Then we could definitely push towards if lots of people are, taking their shorts off the table. For what were we talking about earlier? For the triple witching.
Yeah, that was going to be my last thing before we bring Kane in here with us for a little chit chat before he goes live today. One of the things for MenthorQ that I have noticed, I go back to when I initially had this conversation with Fabio. I don't remember how long ago it was, but it was some time ago. When 0DTE, SPX options, I mean, they were super hot. I mean, they still are, obviously. But I talked to him about the GEX data, and I said, well, he asked me the question. He's like, have you noticed anything different with 0DTEs in your career and how much of an impact they've made on the markets? I said, honestly, not much on the opens, but I don't trade the closes anyway that often. But on the closes, I'm like, man, I've noticed they just spike to these areas where you're like, these random moves where to me they're random because I'm looking at the day going, this kind of doesn't make sense.
Right.
Have you noticed something similar with 0DTE and how that's impacted the closes?
Right. So I definitely think that, it impacts at 350 the market on close macro where people are rebalancing, right? Because that's the last minute for mutual funds to put in their orders. And I've noticed that there's these huge moves now at 3:50 p.m. And especially recently, I mean, we have zero DTEs every day on SPY and QQQ.
Every day.
I mean, it's good for the market because it just increases volume. But yeah, I mean, I honestly don't really trade the close too much unless I see unless I have such a clear plan. Honestly, I like just doing New York Open. I'll maybe trade the afternoon once a week or once every 2 weeks. Honestly, today is obviously an exception because we have red folder news in the afternoon. But for me, unless I see something really obvious on the 5 minute, then I'll trade the afternoon. Other than that, I think even Jim was talking about it in the close, just the percentages of making a potential new high or low on the session is quite low in the afternoon. So yeah.
Yeah, I mean, it's kind of like that dagger. You know, if you've been trading all day, you're struggling, and then all of a sudden you get this random spike at the close, like you said, that 350 macro that Pax has been trading that forever, and then how these zero DTEs. It's kind of like either, you see a lot of newer traders either trying to continue to get clobbered, or maybe they make their money back, and either way, it's a bad habit. If you're not aware of what's happening towards these closes, it could be
just a gamble.
It's a tough moment. All right, I think we have Trader Kane. Let's bring him in. With you and I, and we'll talk with us for just a moment if we can. Kane,
morning, gang. How are we?
How are you?
Yeah, good, thank you. Bit of a rough day to trade, but other than that, yeah, all good.
Yeah, you know what, man? I'll tell you what. I mean, this is. Well, first of all, I mean, having to come in on the first day for you on the NinjaTrader Live FOMC is tough. But, I mean, the one thing that I know, and I've talked with you a lot, and I've talked with Tanya a lot, getting to know you guys better and better, nothing throws you guys off. I mean, you guys are disciplined, you're patient. You're not going to come on here and just do something to do it. And, the reality is I don't care, if you don't trade. I just think, you're going to come out here and talk about what's happening in the markets. And that's the beauty of having people like Tanya and you in this network, is teaching people the mindset and what it takes to really be successful. So I'm looking forward to the session today. But yeah, man, I mean, just you excited about being on here with us today on the NinjaTrader Live? I mean, we're really pumped to have you here.
Yeah, no, I'm pumped to be here, to be honest. I think the space needs something like this, that I guess single source of education, people trading live, doing all that. I'm advocates for all of it, which is why I agreed to come on here. So yeah, no, I'm pumped. And what, I couldn't have picked a better day, in all honesty. It's kind of practicing patience, doing all the things that I preach all of the time. So yeah, I mean, it's I guess it's nerve-wracking a little bit, in all honesty, but I do this every day, so it's just it's a day at the office for me, I guess.
That's right, man. And Tanya, you and Kane did a video, and I highly recommend that's on your YouTube channel, right?
Yes. Honestly, yeah, it's like one of my top videos now. Thanks, Kane.
No worries. No worries.
But we just sat down, did some quick fire, rapid questions. We get into even everything from his strategy to even his mindset and his journey. But it's great. It's a short, simple video that I think delivers a lot of value. Definitely check it out when you have.
Yeah, I'm gonna look for that on your Twitter stream, and I'll retweet that later. Or
yeah.
On YouTube.
Also, yeah, it's on Twitter too. Yeah,
and I'll repost it because I thought that was really good. Just the two of you. How did you guys end up meeting and talking?
We have some mutual friends in the space, T-Trades, and yeah, I mean, I was just back and forth in Florida, and then. Yeah, it's just a quick flight down here. I heard Kane was coming to town too, and a bunch of other traders were coming also. And I was like, okay, yeah, I'll come back again. I mean, I was just in Florida 10 days before that, actually. It was so funny. But it was, it was like, okay, let me listen to his mindset. I could learn something. I always just think about, that's why I'm here again, because PAX is going to be here. I always feel like I could absorb some more knowledge. Knowledge is power. 100%, and learning something just by talking to people, you can't get enough of that. Yeah.
No, we're constantly getting better. And Kane, we can't wait to have you down here in Florida. It's got to happen, man.
Well, actually,
I think probably this summer.
Yeah, but I'm going to be in Florida next weekend, actually. So yeah, maybe I can extend the trip and come down to the studio the week after or something. We can talk about that offline, but. Yeah, last minute trip to Florida.
Yeah. Team, if you're hearing me, we're going to make that happen. Okay, everybody? We're going to get Kane, whatever it takes, we're going to make it happen. So, all right, man. So, Tanya, thank you so much for being here with us this week. You got your stream later today. And Tanya Army, thank you guys so much for tuning in. It's always so much fun. Tanya and I will be back later today, me, you, and Pax in studio pre-FOMC. And so that'll be a lot of fun. You get a chance to meet Pax in person.
Oh, yeah. I can't wait.
All right.
He's a legend.
Good luck, Tanya.
He is. All right, Pax. All right, Pax.
All right, Tanya.
Tanya. This is what happens. All right, Tanya. I'll see you later. So, Kane, maybe we talk a quick moment just about the mindset of you coming in today. Really, that's been a carried conversation we've had all morning with everybody is, look at slow things down. We know we had rollover. We have, you know, all of these different things. What's your mindset before we get to your charts coming into a day like today?
Patience is obviously key. I think, you know, I'm a max pain trader at heart, right? So I always look at when I approach the chart is where is this going to travel to cause the max pain before doing the opposite. And typically on a day like FOMC, that happens in the afternoon, and I strictly don't trade the afternoon. I may trade the last, you know, hour of the day, you know, the options expiry hour. But as a general rule, I'd like to get in the market early and out of the market early. So for me, a day like today is relatively boring. Most of the time, I kind of just, you know, mark out the areas that I want to see price trade into, and if we get there in the morning, then I'll engage, and if not, I just won't. Right? It's just another day. But I'm expecting low volatility early. The open may run, may not. Typically, it doesn't, and it kind of just stalls out and it fakes everyone out. You know, absolutely destroys the breakout traders. Just, I'm a max pain guy, and today is like the typical day where max pain is caused, and then, you know, the rate is most likely going to stay the same. So it'll be interesting to see what the market sentiment is, whether that is a strong or a bad move in their eyes. But typically, when the rate stays the same, I would look to fade that the following days. So I would just mark out my max pain levels where I want price to trade into for me to then flip bearish, flip bullish. I don't like the fact that we're consolidating inside of Asia today. So I'm expecting the open some sort of manipulation outside of that range, and then a continuation, whether that's lower or whether that's higher. I don't actually care. I actually prefer, I don't mind either today. But as a general rule, today is one of those days where I'm just like, I really, really need to see a very good setup to click the button. There's no, you know, there's no intuition in my trading today. It's purely, this is the model. This is, you know, if it takes a loss, it takes a loss, and we just notch it down and come back tomorrow. So yeah.
No, I love that. And I want you to talk about the lab. First day here on the NinjaTrader Live. Some people may not know what the lab is. I'm grateful that you actually, you know, let me come in there and see what you guys are doing. I'm a fan of the whole crew. I think your whole crew is great. I think what you guys have built is great. Tell everybody what the lab is.
Yeah, so the lab is, I guess, a space that myself and my co-founder Alex created. You know, I've been in this industry for 9, coming up 10 years now. And I think I get always asked the same question is, where do I go to learn? Where do I go to learn? Where did you learn? Where did you do this? And it's, I guess, is my way of staying accountable to the market, educating people, being able to educate people, but it's also a space where I just trade live 2 to 3 days a week. Subsequently, it's gone down to 2, obviously, with coming here. But yeah, it's a source of education. My models, all of the things that I look for inside of my model, my co-founder's model, everyone in there obviously is a trader. We only bring in the people that can trade, that are going to willing to put their money where their mouth is. And ultimately, for me, it's just the place that I get to continually push and strive to be the place that naive, 9 years younger Kane needed in the space. And yeah, it's just all about, you know, being authentic. Some people may not like me sometimes. That's just how it is. Sometimes you need to be told the harsh truth that, you know, the stuff you're doing is dumb and you suck. But that's just who I am, right? And I will never apologize for that. But I needed that, and I will always push to do that. So it's just, I will, you know, turn up, live stream, educate, answer questions, and go about and live my life. But it's, I guess, in summary, it's a single source of education in my eyes. And somewhere that I can live stream and be held accountable to the market, because just like anybody, I am a human being and I do get emotional sometimes, but I found I'm less emotional in front of 500 people. Do you know what I mean?
Yeah. I mean, I'm going to tell you what, I've been on several calls with you already. You are composed and the same person in every call I've been in, and that's what's pretty cool about Tanya as well. I had a chance. I can't wait to meet you in person, but I'm sure it's exactly the same. And it was the same thing with Tanya. You know, your guys' composure is amazing. And I think that's really a true testament to you guys putting the work in. And I think, you know, just you guys have really, I feel, I don't know you guys from prior to not too recent, but do you feel that part of you, I mean, you've trained yourself to slow things down to be able to actually, you know, take advantage of like a lower blood pressure, lower heartbeat in these intense moments? Because I know from my experience that's something I had to do, because I'm a pretty intense person, but over the years I've learned to like calm myself down to just be more even keeled, because it was a huge part of where my success came.
Yeah, I think, you know, I always go back to a time when I was up a silly amount of money and got really emotional and round tripped most of it. All greed kicked in, everything all kicks in, and in those times I've been able, in the polarities of those two emotions, in terms of when I've been down a large amount and up a large amount, the times I've been emotional, it's only amplified that. When I've remained calm and stuck true to myself, it's normally worked its way out, and especially over time. So I think for me, it's a game of repetition, right? I can't win every day. The only way I get better at it is by doing it, by doing it more in terms of duration. Doesn't mean I need to be in the market more. And I've seen a direct correlation that when I trade later into the day, or I stick around for 4 or 5 hours instead of an hour, 2 hours, I take silly losses, and I just, over time, just try to avoid those silly losses. So I just have a very, I guess, strict rule set that sometimes I deviate from, but that's purely my intuition, that allows me to come to the market, spend as much time here that it needs to be, extract as much money as I can, and then go and live my life. Because ultimately, it's a job for me, and the less time I can do it, and the more money I can make, I can go do the things that I want to do, like spend time with my friends, my family, and all those things. So it's I guess it's a balancing act. But from an emotional perspective, the more emotional I am, the more dumb decisions I do. So I just try and remain more emotionless, I guess. But with that said, I'm not a robot. I have emotions, and I still get, I get bored when I get into a trade, and it just goes, it prints sideways for 3 hours. Just like everyone, I get annoyed and I get bored, and I'm like, oh, I'm closing this. Fuck this. Sorry, apologies for swearing, but screw this. And then who knows? It plays out. Or sometimes I'm like, oh, great, I avoided that stop loss. But it's just about um, you know, identifying those characteristics, journaling and learning from it, and constantly refining. And that's just the game.
Yeah. Only experience gets you to the point to be able to do what Kane is doing. You need time, everybody, and he's showing that to us today. Kane, let's go take a look at the charts. We're getting ready for the bell here. I'm going to hand it off to you. I think it's important that when we bring in these traders, that I have a little conversation with them. We get ready for the bell, and I let you guys take control, because I know that you guys want to be focused. You talk to the audience through whatever it is that you're seeing, and there's no interruptions. Because that's one of the key goals that we have here with NinjaTrader Live. This is all about the trader. It's all about the experience. So quickly, before I let you go, kind of maybe just do a quick run through of the charts of kind of what you're seeing coming into the U.S. Open, and then and I'll bounce, and I'll be back later.
Yeah, nice one. So look, I think if anybody follows me or anybody knows me, I'm relatively quite a bearish person. I'm most likely a short seller in this market, because I trade retracements. So when I speak about things, I typically speak in a term that price is naturally going to trade lower. So apologies. Obviously, we've seen quite the move down. I actually wasn't positioned for most of this move, but I was pretty much bearish around this top. Got involved in a little bit in here, rode a little bit of the way down, but this market going sideways right now, I'm kind of seeing, I guess, that level that Delhi's also seeing around that, 5,900s in the ES and around that 21K in NQ. I'm a big premium discount guy, and if you've watched Tanya, you'll understand. I basically just want to see price retrade into 50% of the leg that it's just made. And obviously, if we mark out the high from 18th of Feb to the low around 11th of March, and obviously that low is different on ES, it's around the 13th of March. I want to see price naturally trade higher right now. If we go down to a lower time frame, I'm a big Asia range fan. I don't like to see Asia range expand, and when we do expand, we typically consolidate. So naturally, I either want to see price trade lower into this previous day low, or trade higher into yesterday's open, and then I'll most likely look to sell this off. So if we trade lower, it will look something like this, and I'll look to trade down here, back up into here. And if we trade higher, I will look to do the opposite. Obviously, as I just said, I'm naturally quite a bearish person. I would favor we pump at the open into yesterday's open. Midnight's a key level for me. I would kind of want to see us trade higher. And also, if we just take this Asia range and trade lower, then I would just look to engage around here. I don't normally engage at the open, so apologies. I'm a big 10 a.m. fan. I like 10 a.m. because it's the new 4-hour candle, and I like to get positioned in that 4-hour wick ultimately. So I want to see 10 a.m. open. Let me grab my pen. I want to see 10 a.m. open, deviate higher, and then come back into it. And I kind of want to sell it above here with some obviously some confirmation. But that's ultimately what I want to see. So if we push higher, that would fit my plan, because the most likely thing is that in the next 30 minutes we push, we stall a little bit, 10 a.m. opens, does something like this, and then we get to trade lower, and I just get positioned somewhere in here. That's basically what I'm looking for. You'll notice that an orange box over here. The orange box is just the ES opening range. People use different opening ranges for different things, but typically I look for the first 30-second opening range, and after that, I just use that as confirmation as to where ES is going. From a technical standpoint, I only trade NQ. I favor volume on ES, so I like the ES move, but I love the volatility of NQ. So I basically trade the ES chart on NQ. Some people might not like that, but it's done me a world of good. And especially when we get like a big run above like a 4-hour high, like here. Apologies, my trading view is just loading. When we get a run above a 4-hour high and then we sell below the opening range, it normally just is. This is an induced buyer, and I get to sell that down. So I just have to refresh my charts here. Apologies.
No problem. I just want to take a quick note and say Kane is using TradingView, and what's cool is that now we have Ninja. We've always had Tradeovate connected to TradingView, but now Ninja is connected to TradingView. So Train's connectivity is through Ninja. That's just something new that recently happened. So that's really cool.
Yeah, I'm a big fan of trade. I'm a big fan of simplicity. You'll notice that over time is that I don't like having volume profile, the DOM, and all of this stuff in my face. Too much noise, and over the years I've kind of transitioned it out. I've always looked into it. I've reviewed it and noticed that it has a negative effect on my edge. I respect those that do. The look of volume and all of those things that, trying to trade footprints. But ultimately, for me, I'm a big fan of simplicity and patience. So I prefer trading on TradingView, I guess is what I'm saying. The API is a little bit slower, but ultimately it's adequate. I've made quite a lot of money trading on TradingView, so.
Yeah. And that is one of the things I will say to everybody too, is that notice that when you're on TradingView versus directly being on Ninja, there is a little bit of the lag. That's the benefits of being on the platform, but we do have the connectivity and support people that are on TradingView to use Ninja or Tradeovate. And people don't even know that Ninja owns Tradeovate. It's kind of funny. A lot of times people are like, oh, they're different. Now they're the same company. It's all Ninja. Yeah,
I've used Tradeovate. Tradeovate is obviously Mac compliant. I am on Mac, and I'm not technical enough to set up parallels like Tanya. But yeah, I'm like I said, I'm just a simplicity guy. Tradeovate and the NinjaTrader web app, the web-based app I've used, and big fan of it. But NinjaTrader is a step out of my comfort zone, especially the platform. But I'm working on it. But the team were nice enough to say you can trade on TradingView. So yeah.
Well, I'm going to leave you. I'm going to come back because now that I know that you look at the 10 o'clock hour, we're going to come back in with like 5 minutes to go before the end of the hour, see if there's any news. We'll bring in our senior economist, Tracy Shuchart, Shy Girl. We'll talk about that, and then we'll wait for the 10 o'clock hour. But I'll let you engage with the audience, get focused for the day, and then I'll see you shortly, Kane.
Nice one. Cheers, Deli. Speak to you soon. So like I said, I kind of want to see this reaction here, I kind of want to see that these traders are getting trapped here, going long. So breakout traders are just getting kind of hurt here now, and then the true move might be lower. For me, there's not really anything to engage with here. I would want to see if we are going to go lower. I'd want to see big volume through here and then a slight retest. Midnight as a level for me is I guess a strong indication. We accumulate above, wick below. There's buyers participating below midnight, and if we have this strong reaction back below, those buyers typically are gonna close their positions, inducing a lot of shorts into the market. So ultimately, for me, this is kind of the area that I wanna see traded below. And if that was to happen, my general target for it would be around here. So from a risk to reward perspective, it's not great. So I would most likely just look to engage in buys either here or lower. But yeah, ultimately it's right now it's looking like long traders trapped here, and this should just continue to sell down. ES still trading inside of its opening range. Confirmation, if this falls through, should just send this a lot lower. But naturally, I tend to get bullish here. So for me, it's a bad trade. It's not a trade that I could possibly take. So especially considering we just have gone sideways. This is obviously the manipulation lag. I'm a big fan of deviations and the fib levels. -2 takes us to previous day low. So it could be that we just sell down from here. Ultimately, I would need to see a closure at least on the 3-minute below this level. This 5-minute capping off is quite nice, especially above this high. So yeah, if we get a break below here, we could look to trade something like this. But to be honest, I would never take it all the way to there. This is adequate enough. I just need to see that closure in about a minute and a half. Morning, gang. How are we all? T, I'll be in Florida next weekend. What's everyone's bias for the day with FOMC? Up, down, sideways? You gonna fade the print, or are you gonna stay out, or are you gonna try and ride it? I guess is the other question. Hey Tim. No bias. Think you'll trap both sides, stay in. Yeah. What's the risk on this? Total soup short. Bearish classic sell week, Monday to Tuesday, minor cave top of the week. Full moon. Chris, is that you? Yeah, so my model is typically, like I said, I like to be positioned in that 4-hour wick. So for me, this is the open. So I'm happy engaging in above the opening price of the current candle. And then I fractalize that to the 1 hour, and then the 15. The 15 is all the way up here, so I wouldn't be able to do it. And then I would just look for an entry. An entry on the 5-3 minute. I kind of got rid of the 1 minute recently, especially with volatility. It can be a bit shaky. ES kind of picking up some strength here, closing back inside of that opening range, kind of just sideways action, kind of suggesting that 10 o'clock is the play here. Bearish, T's bearish, as long as we respect 50% of the day of previous day. Yeah. The only thing that naturally makes me bullish for a pullback here is this divergence at the lows. We're kind of trading into those -2, -2.5 standard deviations, forgiving volatility, taking it a bit lower. But yeah, the thing that kind of puts me off T about naturally just expecting this to sell down, um, is that is that there's no there's no swing point, I guess, formed with above the previous wick. So where's my coffee in MK? I have no idea. Apologies. Yeah, I don't I don't really use RTH. Apologies if you do. Yeah, it just doesn't make sense in my head. We can get into that, but how do you get rid of the blue background? I don't know, in truth. It only just appeared on my chart. Um, yeah, I actually don't know why this appeared. You'll notice that it wasn't here earlier. Um, so deviations for me, we can use this, right? Is we've gone sideways. What I want to see is price take out run stops and manipulate max pain and then trade lower, right? So if we do it here, do something like this, trade higher above a significant level, that significant level being Asia high in this instance, close below it, and I measure the move that it took to create that high and print it to run 2 times the effort here. Is it? So we can change that right now. Everyone will learn. Symbol, electronic. There we go. Oh, I just cancelled it. Chat coming in clutch. Applied to all. There you go. Oh, I actually needed that. Jeez. Jeez Louise. So really all I want to see is I want to see a closure below here on the 3 minute, and then this trade is valid for me. There you go. So now this would be a valid trade for me. We may just sell down, which is not a problem. But ultimately now it should trade to at least here. This would be my final target because I don't need to be greedy. This is three risk to reward. And normally I'm expecting ES now with that closure outside of the opening range to continue lower. With recent volatility, I'm okay with, a 200 tick, I guess, stop. When volatility dries up and the VIX is back below 20, I would say like 100 ticks, 150 ticks is kind of my average stop loss. Volatility is my friend, ultimately. Yeah, I wouldn't take this now after it's traded pretty much halfway to my TP. And I would never sell stop this, especially with that confirmation back inside. So yeah, what do I mean by a swing point? This is a really good example of a swing point. So this 5 minute candle traded up, new 5 minute candle open, traded above the previous high, and then closed below the low. Yeah, Sumo, I don't use RTH. You're talking a different language to me, so apologies. Yeah, I don't believe in RTH. I think it's a bit of a scam. I know a lot of people do, but it just doesn't make sense to me why we ignore the other sessions that build liquidity that we run during regular trading hours. No vape today, Johnny. But yeah, as a general rule, I have a stronger appetite to risk than most people. I like risk. So yeah. Super bearish FOMC. Yeah. I actually think the print might send it higher today, and then we go lower. That's yeah. Is this account where you started 25K? Yeah. How much do I risk on a prop? Depends. That's a question I probably can't answer generically. Yeah, this would have been a great trade, but unfortunately we couldn't get into it. Even the 1 minute, you could have potentially, but and I guess the retap of that opening range, But ultimately, I would always look to trade the 3 or the 5. There is a 5, but I would never trade it. And we did get ever such a small closure below that gap on the 5, where actually the high of it is 76475 and the closure 76475. So yeah, to the tick, which doesn't suggest that I want to be involved. If we look at this now from a 4 hour, we have that 4 hour wick forming here, taking Asia high, taking out the previous 4 hour high. And if we look at that hourly, it's done the exact same and taking all of this liquidity. And now what I would want to see is I'd want to see at the open of 10 a.m. is if 6 a.m. closure gets respected, then we're most likely gonna go lower. This is the previous 4 hour closure, how it closed like this. So we're in a tough spot. We're just range bound. If I was in this short, I would be pretty comfy. But yeah, ultimately, I would love previous day low into Monday high. That would be crazy. Do you think that M1 is necessary as a day trader? No. I think there you go. That was quite a large candle. Just as I said, I'd be sitting pretty. 223 ticks in 10 seconds. I actually think it was 1 second. Yeah. Or 2 seconds. Someone got a bit trigger happy, it looks like. Yeah, I'm not going to talk about the RTH anymore. I actually think you're trying to just trigger me, to be honest. Do you think that M1 is necessary as a day trader? No. No, so I was going to say, I don't think it's necessary. I think that everyone gets lost in the lower time frames. And actually, I think that the M3, M5, M15 is adequate enough. So yeah, if you're struggling, get off of the lower time frames is my my suggestion to you. Yeah, this is quite the move back up. We absolutely flew through midnight. So I still favor shorts. I mean, yes, left these lows. If ES was to go and take this high now, which I think it just did actually, the high here is 69250, 69250. That high just got ran in my books. So now, if we were to sell back below this level, I could actually have my stop loss here, and we could target this. Yeah, it took it now. So it's definitely taken it. $31. No thanks. Is there something in here? Basically, I would just adjust my risk here on this 3 minute to this. And as long as NQ doesn't trade above this high, or get a closure outside of the opening range, I would look to take this short on the way down. You could sell stop it. You could wait for the confirmation. I'm actually quite okay with the sell stop in this instance. So yeah, my chart's getting a bit messy. Don't like this. There's something in here that's making that. There you go. Yeah, I like this divergence in this instance. I think NQ can just bring ES back down. ES hit this, I guess, daily manipulation level. So from a statistical standpoint, it's like typically the high or the low of the wick. We should get a good reaction. I think I'm about to get tagged into this. What do I use confirmation on my entries? Yeah, my confirmation is the the inversion, I guess. So the marking out of this gap, and I don't want to see price trade below it to then respect it. So we took a similar trade to this the other day. I actually was in this short, and then we got blown out. We actually got blown out. It was NQ took out the high, and ES didn't. And then we self-stopped, and it just ran into the lows. So it's kind of a good one. How many trades do I take on an average day? It varies. 2 to 3 at most. Sometimes, on average, 1 to 2. Sometimes I trade a bit more. Sometimes trade a bit less. Um, I personally don't trade. I don't plan to trade on YouTube. So, my exclusive YouTube trading will be here. So if you wanna tune in, then it will have to be here. Hostile, I use sell stops all the time. I just don't really advocate for it for new people. Pro got saved by a tick. I'm actually not in a trade right now. And now I would just wait for this to. Wouldn't want to see a closure above this level. If we get closure above this, it just invalidates this. And again, I just kind of sit on my hands. I would take this. The closer we get to 10, the more likely I am to remove this. I just need to see the hour close below here. I like that the opening range is towards the higher end of the daily range. So for me, it gives out a indication that we're going to sell down. I do use the indicator to mark out the opening range. Yep. No, it's not hard to manage slippage, to be honest with you. The one thing you've got to understand is that if you're market executing 100 contracts, you're just going to execute into the book. So when you trade that size, you just need to make sure that there's orders in the book to execute. So say there's 50 orders resting in your stop loss, you're probably going to get slipped into the 50 resting above. So maybe exit a tick before, a couple of ticks before to avoid that slippage too much. But yeah, I think the average person isn't going to have to worry about that if I'm going to be completely honest with you. I really like this sell, to be honest. Typical, like, I guess, like search and destroy, like we accumulated, trade higher, traded lower. I kind of just want to see us take out some of this resting liquidity now. And if we deviate higher with 10 a.m., that would be even better, as I kind of suggested. Do you think my 2 MNQ moves the market? It contributes, but I wouldn't say it's the singular factor that moves the market. If we have an obvious sell side liquidity and another obvious buy side liquidity, how can you know which level is going to be targeted first? You can't. There's no guarantee in trading. You just need to use indicators. Or when I say indicators, I don't actually mean indicators. Indicators in a model that suggest we're going one way or the other. Again, there's no guarantee in trading, so it is what it is. It's looking like we might get this closure above here now in the next 20 seconds, which will just invalidate my trade idea. Which is a little bit annoying. But I would just play 10 a.m. then. What's called the indicator for the opening range? It's an indicator created by 2 degrees. You can't buy it, you can't get access to it. You have to know someone that knows someone. There you go. Just invalidates that trade idea for me. I'll be streaming here every Wednesday. So if you want to watch me live trade on YouTube, it's here on Wednesdays. Biggest advice about trading, be patient. You're most likely wrong. And if you could accept that going into the trade, you'll have a much better understanding in the market. Why don't I advocate stop losses? I advocate stop losses for everybody, actually. I think he got confused. I sell stop and buy stop into positions sometimes. Yeah, I don't use YM. Don't care about it. The only two things I care about in this market are the S&P and NQ, Nasdaq, NQ, and ES. Yeah, it's a live account. It's a live account on NinjaTrader. So ES's trading is kind of pulling up towards yesterday's opening range, which we sold out of, which also happens to be, I believe, let's just go up a time frame. Around that EQ. Yeah. So Nasdaq is struggling, which favors us for shorts. As I said, I'm naturally a short seller, so it'd be nice if we just, I guess, trade into these 720 levels on ES and then trade lower. You can connect NinjaTrader to TradingView. You just log in to the broker at the bottom of the screen, use your NinjaTrader credentials, and you can trade on TradingView directly. I like this.
Hey,
So
Kane.
we've got the... Hey, Deli, how are you?
Good. And sorry to interrupt you. No,
No,
I know
you're
you're
good,
waiting
don't
for the
worry.
10 o'clock hour. I just want to come in and say a couple things. One is absolutely Kane is trading live on Ninja with his money. Not live sim, not not anything but the real thing, and I just wanted to confirm that, and also confirm that NinjaTrader is obviously connected to TradingView in this instance. Also, too, I know you're waiting for the 10 o'clock hour. I want to break for just a quick second and go to our senior economist, give you a second, and then we'll be back before that 10 o'clock hour hits. Does that sound cool?
Sounds perfect.
All right, we'll be back in 2 minutes with Kane. Now let's bring in senior economist Tracy Shuchart. Shy Girl, session's getting a little bit busier. Is there any major headlines we need to be watching right now? What's going on out there?
Not really. Still pretty quiet on the day on the news side, that's fine. Coming up ahead, again, 10:30, we have Department of Energy EIA crude inventories. The expectation is plus 800,000 barrels. Crappy came in hot yesterday at plus 4.6 million barrels. So large discrepancy between expectation and what Crappy thought. So we'll figure that out. We'll find that out soon. Again, also waiting for the Fed rate decision at 2 p.m. We've got a panel before that. That'll be really exciting. And I am interviewing right after Tony Nash from Complete Intelligence. Great guy. We'll be digging into what the decision and the language means for the yield curve and the markets in general.
All right, perfect. Tracy, thank you so much for that quick update. All right, let's go back to Kane.
I'm back.
So, Kane, yeah, I'm going to leave it to you. I know that I love that everyone in chat's being engaged with Kane. I love it. Give Kane the thumbs up on NinjaTrader. We're so glad to have him here, and I'm loving this session. So we're looking forward to more conversations with Kane. Kane, I'm going to let you go back. I know it's a critical time for you. Like I said, it's all about the trader on this network, so I'm going to let you take the reins, and then I'll probably be back around 10:25 for that crude number, but we won't interrupt you while you have any trades on. So be well,
Appreciate
my
it.
brother. Talk to you soon.
Speak soon. Yeah, so what I'm kind of looking for is actually the opposite to what T-Trades is looking for, as he just said in the chat. Is I want to see 10 a.m. take out 9 a.m. high, and I actually want to see us have quite the run into this area. Because the statistic around this is the likely and quite the run, I mean volume, like through not returning back to the open. If we do get some sort of shallow wick, it kind of changes my plan. But I want to see quite a large wick so that I can position back into the 10 a.m. open. If we get a shallow wick, I will look to just use some confirmation in this leg. And if we kind of freeze where we are, it would just be this 5-minute gap. I'm just deleting my drawings. It would just be this 5-minute gap. So for me now, if we get a shallow wick above here, my confirmation trade will be this. Let's just assume it's around here. And then I would target that resting liquidity around here, that's kind of the trade. I would welcome we go a bit higher, because it would just give us a better target when we come back. So as of right now, this would be the trade idea because it gives you that shallow 4-hour wick above the previous candle. You also have that divergence with ES failing to do it. I actually think they pick up, ES picks up and takes it out. But if not, then we would trade that divergence. And I want to see both really just deviate above this opening level, and then we can trade back towards it. I use ES for confirmation, yeah. It's the only thing I really care about is ES and NQ. I don't use the Dow, I don't use the Russell. I don't really use anything. I just use these two. You know, you see, apologies to anyone that legitimately trades this way, but I'm not one of these people that needs 16 screens looking at the DOM on every asset to understand order flow and all that stuff. These two instruments is what I look for. The M3 is a bit too small for me, and there's an M3 here, there's an M3 here. So for me, it's just a combination of those is the M5. So it's kind of that. This kind of invalidates my idea here. So I just want to see them both trade up into yesterday's open and then trade lower. It's a game of patience right now. And that's kind of where we're at. I actually favor longs, like short term, but I want to long from this area, and ultimately I want to short from up here, and I want to long from down here. In that order, I want to do this, and if we just die out of here, then I would only look to engage here probably tomorrow or the next day. It's a very quiet week. You know, the guys spoke about it, triple witching, and FOMC. There's a lot of, you know, data in the prints this week that everyone's waiting for. So we have to be patient. It's not fun. Everyone wants to be in a trade. Everyone wants to, you know, get the dopamine hit from trading. But if you can't ride the rough time, sorry, you can't ride the smooth. So yeah, it's a bit of a not so fun day for you guys to watch. But hey, these happen all the time. There are non-trading days or days where we have to be patient. So like I said, it's the best day to really instill that into everybody. Is the open high low close indicator from 2 degrees necessary? I think from a statistical standpoint, right now, no, because the volatility in the VIX is quite high. But you will notice that the daily manipulation level aligned with Asia quite nicely today, and we just rallied out of there. So for me, this is something that I always have on my chart, because if we naturally start seeing some sort of resistance around these levels, I would just trade that. I would just trade the sweep of this and low time frame entry into here. The Bollinger Band rally, the Boomer Bollinger Band rally. Yeah, you know what? I don't share the sentiment of hating on the Bollinger Bands, Daddy, to be honest with you. If they work, they work, you know. I know people that make a silly amount of money trading things that people would probably think are quite silly. But if it helps anyone, you know. Some people hate the way I trade. Great. Do you know what I mean? So beige box above ES and NQ is the opening range from yesterday. I don't trade breakers, so no, I didn't miss the breaker. I don't use VWAP. I don't use EMAs. What color is my Brabus? My Brabus is black. Yeah, I like it when we have no wick for shorts. I'm here till 10:30. Just actually, I'm here from. We're trading till 10:30, and then we have a panel shortly after 10:30 that I will be on today. Yeah. No, I'm not. There's no American accent for me, unfortunately. Well, it looks like Joey made it to the chat. Appreciate you, Joshua. We're back inside that weekly open. So the weekly candle is currently looking like this. We didn't take any significant low or any significant high. So there's no real, we're just basically ranging. Rory, it's very funny you just said, did you disable the doorbell? My doorbell just went. It's a running joke in my live streams that the postman comes at this time of the day, and every single day there is a parcel turning up to my house as I'm on stream, and the doorbell just went. So today the post is gonna have to be redelivered tomorrow. That was funny. Um, yeah. Oh, you've got to be right. Ultimately, I'm a reversal trader, so um, yeah, I have to be quite patient. I have to wait for things to really settle out. I would prefer a reversal around here. This would be nice. Kind of gives us that deviation level. Back up into some sort of discount or premium of the range discount. Like I said, forgive me. I'm naturally a short seller, so it's discount for shorts. Um, yeah, everyone thinks because I do wear a hat a lot, so apologies if you one day see me in a hat. I do wear a hat a lot. Yeah, everyone thinks I must have really bad hair under there. I actually have pretty good hair. I just like wearing a hat. It's just easy. We're getting confirmation above by the looks of it, and yes, on ES, yes, from ES's opening range. Just need to see that closure now. So, and then yeah, if we get that, then it might invalidate shorts for me. There's no real entry for me in this move. Looking back on it, um, again, you could have probably got into something on the 1 minute. I'm sure. No, no, no. So it's quite a big move, but I actually like it when we do this and we continue at 10 because for me, all I want to see now is a playback to 10 a.m. And if we get back to 10 a.m., I most likely would be break even at that point. No, I don't recommend anybody copy my trades ever for any reason. I have a lot of reason for getting in that trade, and I also have a big appetite for risk, which some people might not like. So no, don't. I do not condone that in any way, shape, or form. Am I a Londoner? My nationality is British, so yeah, I guess. But I don't live in. I've never lived in London. I don't actually look at oil. and you're gonna hate this. I don't even pay for the data on oil. All my data is delayed. I genuinely don't care about it. So yeah, my data is delayed on oil, much to everybody's dissatisfaction. Why should I pay for it if I don't use it? I actually like this now. I would just like us to keep trading higher just above that open, and then yeah, ES is trading into the level that I kind of want to see hit on NQ. So with that in mind, I'm also going to draw this quickly. Yeah, they're both coming into that level now. Yeah, so for me, my main trading style is I want to see price trade 2 standard deviations away from the manipulation. In this instance, this was accumulation, fake out, manipulation, distribution. I want that to trade into a -2, -2.5 deviations. And then I want to see a pullback into discount of this leg. So right now it's this leg. It's I want to see a pullback into this leg. So in this instance, around the opening range. And then I want to see a continuation to -4 roughly. That's resting around that previous day high. That kind of makes all the more sense. And then I would remeasure the manipulation of the low move into that discount and see where they align. And more often than not, they're like this, right? They align very well, and -4 align, and it just accelerates through. Yeah, needs to see that closure above. Without the closure, it just signifies weakness still, right? So again, trade it into discount. This is no longer the range. So this is the range. And I just need to see 50%. I can either engage at 50% or go higher. Yes, 1 to 3 cells is enough. Yeah, the market is propping every dip right now. But that gravy train normally runs out pretty fast, says the short seller. You know what I mean? So really now is with this 15-minute open, I would like to see us either create some sort of local divergence. ES trades above this or not. One of them trades above it, and then we get some confirmation back down into discount. So the trade for me is most likely going to be something like this. The reality though is I'm probably going to have to wait. I'm probably going to have to wait for this. So this is going to do something like this. And then I want to engage here. Something like that. I want to see that volume higher to create that inversion. Yeah, order flow isn't that interesting to me. Yeah. You got to look at it like this, right? I've never really looked too much into it. I've never really, I've never really too much into it because it doesn't interest me. But the one thing about order flow that probably does interest me is how many people are buying after I'm buying. That's the interest, because ultimately trading is a game of I'm expecting people to buy after me, because if they're not, then the market's not going to move. So that's the only part of it that does interest me. But then the candles just tell me that anyway because they move, right? So it's like I said, I'm a simplistic guy. I want to just be as simple as possible. If I start adding order flow, the DOM, and looking where orders are resting and doing all that stuff, it just becomes very complex for me. And my simple single screen setup then becomes four screens, a phone, an iPad, and I'm looking at every data print. It's like, hey, I've pushed that out over the years, so why would I then look to bring that back? Doesn't make sense. Yeah, I did notice Deli's watch this morning, to be honest. He got quite the collection. A chat about to tell me that Mr. Crudele is a watch fanatic. You can play guess the watch every day with Mr. Crudele. Keep you on his toes. Damn, this trading markets guy really likes me. Number one fan. It's crazy. Calm down. Chat are gonna go crazy with that one. Root beer on Monday was wild. He's got a root beer with a bezel, with the jeweled bezel. Factory bezel. Yeah, I would take that any day. I'll take that challenge. But anyone knows I would take that challenge. But it's like I don't even know who you are, you know. Yeah, I mean, look, price is stalling. It's not doing what I want it to do, so I can't really engage. Getting around that 10-15 mark. So now I would just want to see the high taken again, and then the potential sell down from there. But ultimately, the only level I'm really interested in right now is this. I want to see price trade back through this level, and if we do, then great. Um, but I don't like that this. We don't have a. Some people like to call it a top wick. Some people just like to call it a swing point. I just want to see that anyone that's short in this wick gets ran out up here, and then a violent move to the downside, leaving them out of the candle. Like I said, I'm a max pain guy. Nice. What's more important for you? A clean draw on liquidity like regular equal lows or low resistance liquidity, or a clean entry on a level you want to see a reversal and there's a single swing point. I like when liquidity builds up, right? Like here, this liquidity build up. And then I want to see that manipulation above the opposite side of that. A violent move to then create that to the downside. Uh God, chat just got busy. Sorry, let me stay. Getting a little bit distracted with the chat. Yeah, I'm not a fan of this wick. No, like the lack of the wick here. Um. Anyway, let's not get into an argument about with this guy. Honestly, I'm not that bothered about him. My favorite time frame is 10 a.m. 10 till like 9:45 till 10:30, 45, 10:30, 10:45. Which indicator? You're gonna have to help me out here. I've got two on screen. I have three on screen actually. The opening range, an SMT indicator that is currently not working because it's a little bit broken. The stat map and the Asian range. Asian range just marks out the Asian range. I can change it to whatever I want it to be. And then the stat map is the levels, the daily, these levels. They're just my levels that I look for on a day and a weekly basis. And then the orange box is the opening range, 30-second opening range. My chart colors are white and black. The black is a it's a dark gray. And then my canvas color is where is that? Canvas color background is a gray, but I can't show you the color of it for some reason. Apologies. What time frames want to control do you mean in your tweet? That tweet was a bit of a facetious tweet. It was a joke between friends, but ultimately, I don't trade point of controls. I think they make a lot of sense, but I don't trade them. But ultimately, my tweet was actually more when I don't trade point of controls, but when I trade, I am the point of control because I typically average into an order around that area. But yeah, it was kind of like your size isn't size tweet without saying it. What are your hour settings? So I am of the opinion, again, this is just an opinion, that the Asia range is 7 till 2. The indicator is slightly broken. So some people use different times, but again, I'm of the opinion. So it's from 7 till 2 a.m. is the Asia range. Yeah, I know oil volume is going to be soon. So yeah, I know it's Wednesday, 10:30. Every day, Tuesdays and Thursdays, I'm live inside the lab. And then Wednesdays I'm here. And Mondays and Fridays are my days of streaming, so I don't stream on those days. What do I think of TCM and cold brew? TCM being what's his name? I think cold brew's a legend. I love cold brew. TCM, I don't really know. The what's his name? What's his name? The currency merchant. That's it. I think currency merchant is good. From what I know, he sold his Twitter, so I don't think that. Yeah, I don't actually. I don't think that the Twitter account of his is his anymore. But yeah, I think from what Kish taught back in the day is legit. I never personally learned from him. Or would you consider a good win rate in RR one that makes money? Is that 300 RXP indicator paid? No, it's not paid, but it is gated behind an invite, so it's invite only. Okay, and I kind of want to see ES take this 15-minute high and then look to trade lower. I don't think we're going to see that in the next 7 minutes, though. Is the truth. So ultimately, what I'm looking for, right, is I'm looking for a 15-minute high with inside a 4-hour high with inside an hourly high to get taken, and then trade below an inversion. In this instance, actually, it's this. Trade below an inversion. We can just redraw that. Either ES takes it, gives us some divergence, and then trading below, get a closure below this with our stop above here, targeting discount of the range, which in this instance is around here. So the trade idea roughly would look something like this. And I just need that. I just need that piece of the pie and I'll be done. I don't trade anything other than the NASDAQ. Don't trade ES, don't trade the Russell, don't trade the Dow, don't trade gold, don't trade platinum. You name it. If it doesn't begin or end with the word NASDAQ, I don't trade it. Yeah, I don't trust YM. We get this closure here. I probably would look to target something like this, but I'd be break even here. Nice haircut. Thank you. Isn't the 5-minute gap cleaner here? Sure. I actually prefer the M3 over the M. The M5 is nicer. The M3 okay. So for example, the M3 closes in a minute. The M5 just closed, and the M15 will close in 4 minutes. So it's like the combination between those, right? So in the next candle will give you a 3-minute and a 5-minute closure, right? So wait for it. So when this 3-minute candle, the new candle prints, the 3 and the 5 are aligned. So I can take a 3-minute inversion on the 5-minute time frame. It's a little bit complex, but you love your M3X drive. What made you stay on till lunch yesterday? It did exactly what I wanted it to. Run out stops and then yeah. How did you alter your strategy for Apex? I was way more aggressive. Didn't get that closure, did we? They've done that twice today. The high and
Hey, Kane, I'm back in frame.
The high of this candle and the close of this candle are exactly the same, so I don't like that. Welcome back. How are your boomer Bollinger Bands holding up?
I know they're calling me a boomer, Kane. I mean, and I keep forgetting what I am. I'm not it's Gen X. I don't know why I always forget what it is. Yeah.
Yeah.
But now I'm gonna coin the phrase "boomer Bollinger Bands." I think it just
get
fits.
that trademarked, I reckon.
Exactly. Yeah. So as you mentioned, a couple things I want to talk about just to set everyone up for what's coming up next. We've got 10:30. We're going to go to our senior economist, Shy Girl, and then Jim Cagnina, and they'll go over what's happening with oil. And then we'll be right back to you, Kane, and then you and I will chit-chat. I've got a couple of questions for you. I want to talk about listening to you throughout the session. If you're not in trades, we'll talk. If you're in trades or a setup comes, we'll bounce. And then we've got you and me and Jared Tendler at the 11 o'clock Eastern hour to talk about FOMO went to FOMC. And so we're going to talk for around 20 minutes or so, just talking about FOMO. I think it'll be a good conversation to have. You and I talk to a trading psychologist. So I think that'll be fun. And I look
Are we going
forward
to therapy?
that.
Is that what you're telling me?
You and I are going to therapy together, man. We never,
That's
look
crazy.
at, we haven't known each other for too long. We're going to be sitting in for therapy together already. It's happening. So yeah, we're about to admit, I know you say you don't even watch crude. I'd be curious to see if crude gets any sort of a bump today off of this data. Everyone's probably so hungry for some action. I wouldn't be surprised if the numbers didn't do too much, but yet crude got some volatility, and we'll see what happens on the charts with Jim and Tracy. I think we're just about a minute away from that. So, all right, guys, let's go to Tracy and Jim, and we'll see what those crude numbers are, and then we'll be right back with Kane. It's still you and I, Kane. This is something we'll talk about in therapy, like these silences between you and I.
These awkward silences, yeah.
Awkward. You and I staring into the cameras going, well, we're still here.
We're still here. So
Apparently
what I
Jim
will
is
say,
getting
right?
makeup done right now.
He's getting makeup done. So if this 3 minute
Meg,
closes
he's getting
below
makeup.
here,
He's not fully touched up.
yeah, if this 3 minute closes below here like this, I would actually want to sell this now. Based on that closure, especially going into there. So this would be my stop loss, and then I would be break even at this point. So this is kind of what I was anticipating, was potentially a wick higher and then a drive lower. When these 3 and 5 minute candles align, I know you trade the 3 minute daily sometimes. I actually feel that those
do.
candles are a bit more jumpy, and I can just grab at the top or the bottom of those candles sometimes and anticipate the closure below here. Again, that's my intuition, but ultimately what I've kind of always said is that I'm looking to trade the wick of this candle above the previous candle. And if we don't, I would just get another stab at this in 4 minutes, the below this blue box, right? So that's kind of what I'm looking at. And then, yeah, this would be my break-even point. This is called LBP, logical break-even point. And then I would basically just be targeting midnight, deviation back towards midnight, and playing that overall range manipulation distribution. And I don't need to care that it distributes to the downside. I just need to grab a piece of it back inside of the range. So that's currently my thoughts. The order's on screen. You can see it. I'm in it now. So yeah, this is kind of what I'm anticipating. And now I just want to see it drive down back towards this break-even point. And as and when that hits, so I'll be break-even, I'll be risk off. So yeah, so nothing really like. I think we're gonna go over to Jim and Tracy soon, but shall I go soon? Sorry, and then
right.
yeah. So basically, everything will just to overview this trade. I will remain in this trade as and when we get here. I would move my stop loss basically a point into break even to cover fees or anything like that. And if not, and it just rides to here, that would be the plan. But yeah, over to you guys.
We're going to stay with Kane. We're just going to bring Tracy in, and
Okay.
and because Kane's in a trade, I don't want to interrupt that. So, Shai, what are the numbers? Let's bring her into frame.
I'm not in. Oh. Hey guys. Sorry to interrupt very quickly, but just have the EIA numbers. We had crude at plus 1.745 million, Cushing minus 1.009 million, gasoline, second week of a draw, 527,000 barrel draw, distillates, a big distillate draw at minus 2.812 million. That's basically it. I mean, we're still looking good. Crude inventories are sitting at 437 million barrels, which is about 5% below the 5-year average. Motor gasoline is about 2% above the 5-year average, and distillate fuel is 6% below the 5-year average for this time of year.
All right, Shai, thank you. Yeah, crude didn't do much, still kind of grinding higher. Thank you for that update for all those crude oil traders out there. All right, everyone, let's go back to Kane.
Yeah, so this is kind of the trade idea for me now. It's just I want to see this sell down at least into the open, and if we get that sell lower, great. But basically at the open of the 10 a.m. candle, I kind of want to go break even. I don't want to see it then continue. So as a general rule, like a very small wick on a 4-hour candle, we would see some sort of deviation to then reprint that wick. there's not really any reason for a larger time frame candle to not have a wick. So as a general rule, I use these as like a magnet towards price. And there is a statistic, but it's a bit of a running thing, is that I always look to trade the 10 a.m. reversal that never plays out. But the reversal is just create that large wick back down into the open, and then play that deviation. So all my eyes right now are just on this 5-minute closure. I just want to see this 5-minute close below here, because if we close below this level, this should just drive down. If not, we are in risk territory of it just deviating higher again. I would always take this. I would just welcome some sort of divergence with ES. That would keep me in this trade. But yeah, I like to use the 3 and the 5 when they align like this. So the 3-minute again, this next minute candle, and the 3-minute will close, and then the 3 and the 5 will align. Actually, they will not. This candle is the next candle. So yeah, I just want to see this 5-minute closure below this box. This is the M3 closure that I was looking for, which we got here. And now I just want to see the M5 closure below here. And at that point, yeah, at that point it will. This is that. There's no divergence. This trade into the M3. And now I just need to see that M5 close, and then we would just go break even here, and we would let it run, or we would get here break even. I know the next question is going to be, or there's going to be a question as to why I don't take partials, why I don't trade micros. As standard, especially on a smaller account, I don't really like to trade micros. I don't agree with partials, right? So micros to me don't make sense. Especially when my risk pretty much for a trade is always around $1,000. If I need to risk more than $1,000 on one mini, it's probably not the right trade in my head. So yeah, I think partials are just over time a bad idea. I can make I make a good case for partials and swings, but intraday, you're either right or you're wrong. It's either you either close it, or to me it just creates some sort of FOMO. You know, every time I've closed my trade earlier than I've wanted to, i.e., it hasn't reached my destination yet, naturally I start to flip bias, just naturally, because I'm a human being. So for me, it keeps me in those trades longer. And yeah, that is just what I want to see. So either I'm fully in or I'm fully out. I don't want to be half in, half out. So but then in swings and longer term trading, it makes more sense, because you can also add to that position over time as well. You can close and re-add, and ride the ups and the downs of that swing. Intraday, this is a small move, I guess, on the grand scheme of things. So either I'm right or I'm wrong, and if I'm wrong, I just want to be out. So for me, micros don't make sense, because I'm adjusting to risk appetite, what I'm looking for in the market, or where my validation is, and where I want to be break even. They're like fully out stages of my thing. If you're in 10 minis here, it doesn't make sense, or 10 micros, it doesn't make sense for me to sell 5 here and then sell 5 here, because if we do go here, I just absolutely chopped myself out of the 5 micros I sold here. And if we go here and then go back to break even, okay, fine. I caught a smaller move, but over time, my model, I've created a model that allows me to be right more often than I'm wrong. So I'm just stealing my money from my future self, and just to make myself feel good now. And I don't agree with that. I'm okay being wrong. And I think a lot of people have a fear of being wrong. To the point that they will take partials to make themselves, to get that short-term dopamine hit and know that they're right, or make themselves feel like they're right by partialing out every 30, 40, 50 seconds, or every minute, every low, every this. But if you then just create a model that allows you to anticipate where you are right or where you are wrong, and be in and out of the market at those points, then it's better for me, normally. Like I said, all the swing traders that are in trades for 3 months, don't come at me. I get why you're partial. That makes sense. You want to pay yourself over periods of time. That makes sense. That comment is mainly aimed at intraday traders looking to day trade the stock market or, the futures markets. I prefer the M3 because it's a mix between the M1 and M5. And I think the M1's too noisy and I'm too impatient for the M5. Yeah, of course. I mean, if it hits stop loss, it's 100% because I'm streaming and, all the market makers are coming after me. I mean, the sarcasm in that comment, if you didn't get that, but guys are glazing me in the chat about my hair, my looks, everything. No, it wasn't a rip on anybody. It was just I think a lot of people look. I think a lot of people, whether you think or don't think this, I think you think the market comes for your stop loss, right? You probably feel attacked sometimes, right? The reality is that it's not you. It's just the market hunts liquidity, and that's just a thing. Volume-based traders will have a field day with you if you trade with like large size, Who's my eyebrow girl? It's the one thing I haven't had done. South Africa was really good. Yeah, so it was nine and a bit years now. It's been 10 years at the end of the year. I say a decade because it sounds better, but it's actually not true. It's actually just over 9. Yeah, I just need to wait for these to close. So the next 3-minute candle should sell after this candle should sell down. Looks maxing. And if it doesn't, my stop loss is in, and the risk, I know you can't see that right now, but the risk on this trade is 167 ticks, not 17K, $835. Wow, my door's going again. Another parcel. Can you believe that? Oh, it's a common theme. Looks like paper trading. That's crazy because what's the current contract? NQM? What did we move to? Actually, I can just do this. From to NQM. That's insane. That's so funny. NQM. You nearly got me though. Close, but no cigar. Anyway, so ES is trading into that 10 a.m. open now, right? So by every logic of the way I trade, I don't want to see this come back to break even now, because at the moment this is printing a small divergence. So, because this is 10 a.m. So if we look at the 4-hour candle on ES and we just mark out the open and we make this nice and bold and we can make it pink today. You notice how ES came back to it and we're getting a reaction off of it. This is the same point. So if you use my crosshair and you look on NQ, you'll notice a big line through that candle, right? Here it's been, so right now it looks like this. So now I don't want to see price return, because if it does, then we just are most likely going to deviate back and create a new high. I want to give this room to sell down and go from there. You got to think, we're not even up 1 hour on this trade yet. We were risking $800, but now the trade is completely free. The slippage up here, and I'll give you guys a little thing. The spread up here is around a point, right? So it's 4 ticks. So all I need to make sure is that I'm at least a point from my stop, from my entry. So for me, I just don't want to see this 5-minute get traded above now. We get a closure. We should get this closure now in the next 55 seconds. And then that's it. The trade's free for me. It either plays out or it doesn't. And that's like most of my edge, right? It's playing the model. And when I understand it's either going to continue or not, I can't tell if it's going to. That's where I'm now risk out. I'm not going to lose money on the day. And the upside for me on the day is $1,925, and the downside is probably like $40 with the slip it, it gets stopped and whatever. So that for me that's it. Now I don't care what happens. I'm done for the day. And now I just let it play out. Does that make sense to everybody as to why I do it that way? No, I don't. Listen, I don't know what most of you guys do for a job or don't do for a job, or how much money you make a day. But if you earned $2,000 a day for the rest of your life, you'd be pretty well off. You could buy a lot of, you know, root beers with diamond bezels. I could tell you that. You could buy a lot. You could buy a lot of cars, a lot of houses. Like that is, it's a very, very good amount of money. And the best thing is, like, I'm not going to lose money today now. Look, this trade, either this trade's going to play out before FOMC, or I would close it. That is the only condition. Sorry, and there's one thing I haven't really said about is, I would never hold my trade going into news. There may be the odd occasion news catches me offside, and I'm not like finger on the pulse with news, and sometimes I'm in it and it runs and it's great, or sometimes it stops me out and I'm like, well, that was silly of me. But that's where you learn, right? Yeah, root beer is a watch, and it's funny. is a Rolex, and it's just Mr. Crudele I think he had a root beer on. Someone in chat said he had a root beer on the other day. You honestly, guys, you should have sold 17. Was it 17.15? I think he said. Oh, wait. It's crazy. You couldn't. Yeah, the 10 a.m. stat's good. How do I choose my target? Midnight is a good level for me. You could also look to cut this at the opening range if you're expecting the opening range to continue, like to hold as a level of support. Sorry. Yeah. How was your long reversal trade idea? The exact same. Yeah, I just want to see deviation below previous day low, and then basically the same sort of setup. Below previous day low, I would look for probably a minimum of a 5 minute, and kind of go from there. But yeah, if this is, I'm done looking at this now, just as an FYI. So you have all of my attention from a question standpoint, because me looking at this isn't going to make it play out or do anything. And it's just, for me, the mental clarity now is I don't need to be obsessed with what's going on my screen. It's either going to play out one way or the other. It's going to either buy me out or sell me out. It's going to buy me out either way, sorry, but I'm either going to make money or I'm going to be break even and not lose money. And I think that's the important part. A lot of people are in this game to make money, then focus on not losing money, and you'll suddenly make more money over the time. Yeah, I don't really know about the 24-hour trading with NQ. I mean, you can trade it 24 hours of the day now. 23 hours of the day, sorry. All right. I just think I would be interested to know how much volume difference there would be during the other hours, right? So yeah, that's probably my only.
I'm back in here with you, Kane.
I see you. How are you? There's lots of watch
Good,
chat.
man. How are you?
Talk
You
us through your watch game.
I'm thinking to myself, I'm like, is he going to be bringing this up to me? Yeah, I've got a few. This is the rose gold root beer that everyone was talking about.
Yeah. Damn, I need to get me a rose gold root beer.
Yeah, I know. I've bought and sold several different ones over the years. This is one of my favorite ones. I'm eyeing a couple more. I am kind of an enthusiast when it comes to it, but I like them. They're fun for me. But
Yeah, good. I mean,
dude, you're
everyone's got the
slaying it
passion.
today, by the way. Yeah, you know, this is I don't buy a lot of other things, but this is something that I do kind of rotate in and out of. But yeah, I know it's. I'm gonna unveil a couple other ones as we go through the network, so it'll be kind of fun.
Tune in every day.
But
for
dude,
the
you're slaying
watch.
it today.
Yeah, I appreciate you.
Well, my shoe
appreciate
collection is the one that's really kind of crazy. I have so many. I have a ridiculous amount of gym shoes. It's like a stupid.
Oh, I
number.
will. If anyone knows me for anything, it's my insanely over the top shoe collection. I have a whole room in my house for shoes. It's pretty up there. So, like for example, when I went to Cape Town in South Africa to Cape Town, I took a whole suitcase for shoes. So, yeah, I see you on that. But yeah, appreciate the kind words around trading. Obviously, a bit of a slow one. These trades normally play out pretty quick, but everything is going to plan right now, and we're just having to be a bit patient with it, but keeping the chat entertained.
Yeah. The best thing is patience and discipline all stems from your preparation, and you lay it out perfectly, and then everything you've talked about today. I think my biggest takeaway for traders watching this is that plan, believing your plan, like truly believing your plan. That is what creates patience and discipline, and that's why you execute so well, because you know what you're looking for, and when it finally comes, you're ready. And so you're patient and then impatient. And impatient is maybe not the right word, but when it comes, you hit it. And it was just like I was watching the whole thing, and I'm like, it's hard to be live. People don't get it either. You know, it's hard to be live, sitting here talking through stuff, and then all of a sudden it's like, well, now it's here, and now you got to be right on it. And I hope that traders out there understand how much it requires to actually like be patient, talk to people, do that, stay focused, and then when it comes time to execute. So yeah, I thought it was really, like I said, you slayed it. It was great.
Yeah, look, I've learned over the years in the times that I've hesitated and then it's just ran without me. You know, like this 22K to 19K drop. Look, I'm bearish, right? I'm expecting like 18K at some point in the next couple of months. And I agree that with you, obviously when you were speaking with Tanya around that run up and then into that level on ES. I'm in agreement with you. I want to see that run up. But once we run there, I'm selling that all day. I'm finding a way to get in onto that sell and selling that down into the lows, right? And just like this trade, I don't need the whole move. But one thing I will say is that 22K to 19K drop, I hesitated at that top because I sold a few times and got ran out. And then I was waiting and waiting and waiting. And then my daily model printed. And I was just like, this is time. Swing this into the lows. Hesitated. Next day, boom, minus 2K points. Like, boom. I'm just like, wow. Well, now we might bounce. Boom, 1K drop. Boom. Do you know what I mean? It's just like 3-4 days, like we're down 10%. And I'm just like, wow, Kane a week ago would have killed to see this. I now want to go back a week. Do you know what I mean? It's just like I didn't execute and I was sidelined the entire move, you know? So, yeah, it was painful. But again, that could happen every day. The good thing about a daily, intraday is I'm either right or I'm wrong and I'm done. I'm out and I can just move on with my life. Long-term swing trading, all that stuff, it takes a bit longer, so yeah.
No, absolutely it does. A couple things I want to set the table for what we've got coming up. We've got Jared Tendler in like 7 minutes. I want to bring up a couple things I saw in chat, and we'll see what he has for us. One of the things that I think is really important for you to explain to everybody, and I love this about you because, like I said, I've watched you in the lab as well. Your ability to hold the winners. I mean, how did you get to the point of like, and I know you kind of went through it, you're like, okay, move it to break even, the rest is just free, but it's just mentally, people struggle with this, Kane. It happens over and over again. Like they get in a position, like even this morning we rallied up and now you see the market's breaking, you're sitting there and so if you get a short on, it's how do you find the commitment to do it? What is it taken for you to get to the point to be able to commit to holding these trades?
It's a hard question, right? Because the truth of the matter is that my answer doesn't land well with people. And that's just me being really honest, is that I have such an unemotional attachment to money. Um, Obviously, I really care about making money in my day-to-day life. Um, but like, I know, I really know that this doesn't like is not going to land well with the average person. Is that I'm not I'm pretty well off in life in general, right? Trading is just a byproduct of how I make money now, and it's I don't want to be paid every single day. I want to be paid over a larger period of time, and I'm not using the money. The $1,200 on the table is not going to change my life today, and that's just me being completely 100% honest. It's a lot of money still, but it's like it's not going to have that detrimental impact. If this was 1.2 million, it would be off the table because it's different then, right? And when you have that emotional attachment to money, I'm a big advocate, but take it off the table. I said this the other day, right? Is that if the money in your trade matters to you, take it off. Like, don't even think about it. Close your trade. If that money gets to a point where you're like, that is a lot of money, take it off. Be done with it, move on, right? But I've always tried to position myself to a point where my daily risk and my daily reward isn't going to consistently change my life on a day to day. Of course, I've had massive days, but it's got to a point where the market's running. I'm like, I'm up 300K, I'm done. This is a large amount of money. I can go do a lot of stuff with this, right? If it's up $300, it's probably not going to change my life today, but it may that $300 may change your life. So if it's you're up that much, take it off. And if ever I get to a point where my account balance is now I'm risking an amount of money that I'm uncomfortable with, I downsize. I just de-risk my account, right? To the point that it gets to a point where I'm comfortable with that now. And that's just I really try and remain unemotionally attached to it. But like I said, the average person, like all the money matters to them, and I get that, and it doesn't land well. But that is genuinely, and there's no real other answer I can give, other than you're either risking too much, or you're risking too much to the point that you can't stay in those winners long enough, or the money matters too much to you to the point you shouldn't be in it for that long. All right.
And here's what I'll say about that. I've gotten to that point in my life too. I'm very fortunate, and you and I both came from humble beginnings, so I get that. I said that to you well before we talked about NinjaTrader Live. If you remember, I messaged you, and it was a picture of you with that car and your brother, and I'm like, dude, I could totally relate to you, and I get that.
Yeah.
And you and I both been fortunate. We made some money in this business, and life-changing money, and that's cool. But prior to that, I'm just curious, like when you first started, and I think this is the part where you and I have found the ability to get over that hump to where it has become, we've been able to detach ourselves from that moment of money. Is this something that's always been like that for you, or was this something that took time for you to build?
100% took time. Like no one, I don't want to say nobody, right? But I would say the average person sucks at trading when they start, right? It's hard. It's emotional. We're wired a certain way. It's, you have to be a real, type of person to not care in any way the moment you start trading. If you like playing the roulette wheel on a Friday night with your friends and you stay a bit too long, trading's it's gonna be really hard for you. Trust me. I know that. Like, it's gonna be really, really hard. You have to treat this with the respect and discipline it deserves. And the reality is a lot of people work that out the hard way. All right. They lose a lot of money.
Yeah.
They learn from their mistakes. And then you get to the place where we're at and you're like, treat it with respect because it will humble you very, very quickly if you don't. And it will. Like, it really, really will. Like, I've seen the market humble the best of traders, including me. All right. It will humble you so fast. You will be like, well, that was a whirlwind. What even happened? Like, and you just have to turn up every day and treat it with the respect, but treat it with the respect and risk the money you're willing to lose. And if you're not, then don't do that, because at that point it's gambling, right? And that's the one thing I don't advocate for.
Yeah, all right, guys. Let's see if we could get Jared Tendler in here. I know we're maybe a little bit early, but when Jared comes in, let's get the three of us in here. And here's my boy Jared. How you doing, man?
Joey, good to see you, man. It's been too long.
It's been too long. The last time I saw you was in person, and me and Jared where we were at the poker tables in the Wynn. or what were we playing? We were playing. What were we playing? And you were watching me playing. You're like,
playing
Deli,
Let It
listen,
Ride.
man.
Let It Ride. My father's favorite gambling game. I don't like to
That's
lose the money, the hard-earned money that I make, but I'll spend a little bit just to honor my father.
You'll love this, Kane. So it's me and Jared. I see Jared. I don't remember what we were even there for. We were there for a conference or
Like the
something.
money
And next
show,
thing you
yeah.
know, we're at the Wynn. We're sitting at the money show. We're at the table, and he comes over. He sees me. He's like, "Hey, Deli, what are you doing?" And I'm sitting there, and he's watching me, and he's going, "Man," he's like, "Time out, man." He's like, "Listen, just bet this and this," and I'm sitting there. I got money stacked all over the place. He's like, "No, man, you got to rein it in." I'm like, you're right." And it was funny. You ended up making money, or at least breaking even, and I know that I lost. That's kind of
Breaking even there is making money, so yeah.
Yeah, good
Yeah.
times.
Yeah.
So,
Kane, good to
Kane,
meet you,
have
man.
you
Good to meet
met
you too,
Jared?
Jared.
Oh, great.
I
To
have not. No, this is our
Yeah,
first
yeah.
time meeting.
Okay.
Yeah, good to meet you. It's good. Great listening to you. Coming
So
in here.
cool. Yeah, I mean, so we were talking about holding winners, and I think there's a lot that we can go. I kind of want you to lead the conversation today, Jared. You know, you got the boomer, the Gen X guy. You got you got Trader Kane. Kane, are you a millennial or Gen Z?
I'm Gen Z, mate. Yeah.
Are
Oh,
you
wow.
even?
I'm
You're Gen
31,
Z.
so yeah. I might be a millennial.
Yeah.
I don't know. I can't remember.
You're
Chat
like
will tell me. I'm
border.
pretty
I think
sure.
I'm Gen X. I'm 46, so
You know what I'm gonna do?
I'm
I'm gonna ask the
47, so.
trusty Chat GPT.
And by the way, everybody, look at King slated today. We've got Jared Tendler in here. We've got all these people on YouTube. Let's get these numbers up. Give us a thumbs up and a like if you're enjoying this NinjaTrader Live and what we put together for you guys. This is all about the trader, and we're having a blast doing it. And we're so humbled, really, by how many people have come in here and supported us with this. I can't thank everybody enough for tuning in to this network. This is just the beginning. We're only on day 3, and I couldn't be more excited for what we've done and what we're going to be building. But Jared, like I said, today I'd like for you to lead. If that's cool with you, you lead the conversation. Like I said, we're going to wait to see if he's a Gen Z or a millennial. It's going to depend on how I think Kane answers some of these questions, right? And then you got the Gen X guy, and then you're the other Gen X guy. So maybe you dictate traffic between he and I, and FOMO for FOMC, or really kind of anywhere you want to take it. I'm good with.
yeah. I mean, I think just kind of following up on a few things that Kane was just talking about. I think it'd be helpful for a lot of people too, both in terms of the being able to hold winners longer, but also the mental clarity that you need to be able to have when maybe taking a few paper cuts, kind of leading into to some trades. I think the ability to hold trades longer is very, very different when you are an established trader who's got a proven edge and is capable of yielding money. I mean, I'm not saying that it's ever that it's always easy in the examples that you gave, Kane, but I think when you're trying to break through, I think sometimes a lot of traders have this kind of internal governor that they think that the risk is greater. I mean, that emotionally, the risk is greater to have a profitable trade reverse and stop you out than it is to actually hold it to its intended target and to deal with the internal stress and turmoil of watching it dance around, because it can be draining just having to sit there watching it. But you've got to really understand that the risk is greater to your long-term ability to be successful by chopping out, a good chunk of the profitability of each of these trades. So the ability to kind of withstand that internal tension, I think, is a very important skill for traders to develop. It's one that, I think many athletes develop over time, right? As they're climbing the ranks from, let's say, the juniors to playing high school to college to, lower level professional leagues, right? And then when it comes time to, sink the winning putt, make the winning basket in a tournament, it's a lot easier because they have so much of a track record established in dealing with those very, very intense moments. But traders oftentimes, kind of come off the street from a normal job where stress is very different. It's not about trying to break through and live out dreams, make money that can transform your life, your normal day-to-day stress is, whether or not you're going to be able to get to work on time and deal with the demands of that job. So there is a time consideration here of giving yourself the opportunity to build the hardiness and the strength, the potency, to like mentally to be able to kind of withstand those intraday tumultuous moments of actually just holding. And with a lot of my clients, I have them actually pull out their phone, open up that stopwatch app, and as soon as they start to feel like they want to close the trade, you just click that button and see how long you can go for. And trade over trade, day over day, see if you can condition yourself to go longer and longer. I mean, much like athletes would with physical conditioning, physical strength building. It's just one kind of trick that I've kind of come up with that can kind of help to do that. It sort of changes the game a little bit. It's not about making money in this trade. It's can you actually make progress? Because it is a requirement for you to be successful long term to be able to hold trades to their intended target. So I'm just kind of curious from both of you what that might have looked like in the development of that kind of hardiness and that strength and withstanding the ticks moving up and down a lot while you're waiting for that trade to close.
Do you
Kane,
want me
you
to
want to
go,
go
Daddy?
first? Right.
Yeah, sure.
Sure.
I think for me, right, is I I've seen the amount of times I have closed trades just before I get stopped out to save myself a few bucks, and then I end up being right. And then I use the same logic in my TPs but in reverse, right? Like obviously I'm not closing early before it reverses. It's like I want to make sure that I have a model, I have a predetermined exit on both sides and a predetermined point of getting break even, and I let the probabilities play out. I know I can't control it, but I only know that because I've had to, succumb to it over the years. I have, and I will admit this, I have a big ego problem in my life, or at least I did, right? I really cared about being right more than I cared about the outcome. And I had to really reflect on that in my personal life before I could reflect on that in my trading life. And actually, sometimes I'm like, this trade's going to play out, and then I can make every excuse as to why I didn't. But the truth is that it was just a trade that didn't play out. It was just one of those.
And were
And
there times where you like closed trades because you thought it was going to reverse and that was a way of trying to become right?
say that again. Sorry.
Were there times where you would close a trade prematurely because in that moment you sort of spontaneously thought that it was going to reverse, and so that was another way of being right, even though it kind of deviated from the initial plan?
Yeah, and I, if my model forms against me, then it's my model forming against me. It's completely different, right? But if I'm just like, oh, this needs to hold and it doesn't, and it's, I don't know, 100 points away from my entry, and then I close it, and then we fall through the face of the earth, and we go to my TP, then I get annoyed at myself if I get frustrated. Not really because I made money and I'm happy on the day. It's because I cheated my future self out of money, right? Um, and like I said, my job is to find a model, find an edge, get confidence in that model and edge over a period of time, and then let those probabilities play out in the future. I've let go of the attachment to being right. I like being right because it obviously monetary value means that I'm making money, paying my bills, living my life. But if I'm right today or wrong tomorrow or wrong today and right tomorrow, who cares in 3 months? Because over a period, I'm right X amount of the time, and I had to really know that this is a long-term game. I've had short success, long success, short failures, long failures. We've done it all right. But it's actually knowing that if this is going to play out, if I'm going to use a data pool of 5 years to back test my model and I'm judging it on a week of losers, then I'm an idiot. You know, the sample size is the same. So it's like, if I'm going to use the data pool of a longer period of time, um, to then later on only judge it on a week of losers or a bad month or a bad quarter or whatever. And then I go back and look at my model, and January every year just is awful for my model. Oh, we're in January, we're having a bad time. This is just the data pool that we back tested, become confident in it. So it's like if I'm going to darn the sword of the data, darn the sword of the data, and leave the rest of it on the table,
Yeah.
So, yeah.
And Anthony, for you, I mean, obviously you got your start in the pits. You know, hard to imagine too many more stressful environments to deal with. How much do you think that, kind of prepared you for being able to kind of withstand the internal turmoil that is required to hold trades to their intended target?
Well, as you know, the pit was super, super, super short term. Nobody was almost holding trades for more than seconds. I mean, some guys did hold them for a little bit longer, but not many. I just want to comment one real quick thing on Kane while it's at the top of my mind, because I have to say it, and it's great to see Kane talk about how he thinks more long term now at 31 years old, because at 30 years old I did not think that way. And I was continually thinking short term, and it was a continued issue for me. But when I started to think long term, my short term success got so much better. And I think that's a big psychological shift for younger guys and girls that are in this business to start thinking long term, because it gives them the ability to slow things down. Like he said, it's just January. But when you're younger and you feel like you have to make money, the only thing you think about is today. So I just wanted to say something about that because I thought that was perfect. But getting back to the pit, yeah, I mean, for me, I think it was really difficult for me because pit traders were so super short term. And then when I went on the screen at a very early stage in the late 90s when the E-mini was just starting, I was trying to do what they were doing in there, and it was just extremely difficult, And so I had to learn how to hold. One of the ways that I learned how to kind of remove the attachment is like kind of what Kane is saying, is like one of the things was I constantly tested myself. So like when I got to areas I really liked, I almost like was testing myself incrementally with size and then just rotating out of that size really fast. So like I would work my way up to 5 minis, 10 minis, 20 minis, 50 minis, 75 minis, 80, 100, and just keep. And I would every time my goal was to scratch them. But what I did was I would keep like 2 or 3, and then I would be like, it would almost be like this intense moment of like, could I handle it with that position on? And I'd be like, cover them. And then next thing you know, when I had 2 or 3 on, I was able to like slow it down and hold them. So I started to develop a style where I got really aggressive at price areas that I liked, and I would have a couple first of all, if they went against me, I'd burn out of them right away, and then I'd try to get back in. It's a different time. Markets weren't as fast. But that's how I built it up, was just consistently testing myself. And so as I got into bigger positions really quickly and I peeled them off, it was easier for me to sit in smaller positions and hold them. And so I felt like I had to train myself, and I felt like I go from a high level of intensity to calm back. I'd be like, it's only a 3 lot, now I can hold it. And I would let it play out. And that's how I started to get that emotional disconnect from the money, was able to hold positions. And it was funny, I would make more on 3 lots a lot of times, or 5 lots, than I would on 50 lots. Because the 50 lot, I'd cover 47 of them for a quarter tick or have 50 cents or a quarter tick loss, and I'd hold 3 and I'd make $2,000. So that's what I did.
Yeah, that's a brilliant way of conditioning yourself. I think the principle holds. I think for a lot of traders who are kind of struggling to be able to do that, think first about conditioning. If that doesn't work and there's a continual kind of, you're getting tripped up and being unable to hold, you got to kind of examine a little bit more of the kind of fear, the anxiety, the overthinking that's present in there. And some of that might just come from a slight lack of conviction in your strategy. I mean, both the guys here have developed their systems over a long period of time. They have a bedrock of knowledge that they are relying on. If you're relatively new in the game, and I say that being like, south of, 2 years, it's you're still developing. You're a bit of a toddler kind of bumbling around here. I'm not saying that you can't be successful. I'm not saying you can't make money, but I am saying that when you have a longer track record, that confidence and conviction to hold is a heck of a lot easier. Not to mention, there are kind of less holes. I've got plenty of clients who've struggled with, I know we're going to get to FOMO here, but struggled with being able to hold trades as well as FOMO, sometimes because there are just slight weaknesses in their strategy. If their entries are just a little bit off, then, holding to your target gets a little bit more difficult. So, examine the conditioning aspect, examine a bit of your strategy, work to build a bedrock of confidence that, is going to happen over time, but you want it to be coming from the right place, which, I know, Kane, you mentioned, the gambling earlier. I'm obviously, may do it occasionally as a hobby. But if you're here as a serious enterprise, I mean, gambling is the antithesis of what you're trying to do here. You need to become the house. And so if you're kind of gambling your way to confidence, which is what a lot of traders end up doing, both in protecting and closing trades prematurely and or on an FOMC day, trying to run up a big number here, you're trying to gain confidence in the wrong way. It's not reliable. It's not what you ultimately want to have as you kind of further go up the ladder here of success. Because at some point, chickens are going to come to roost and the house of cards is going to fall apart here a little bit. So I guess when we kind of maybe pivot to a little bit of the FOMC kind of day and the we'll say seduction to trade it for a lot of traders who ought not to be, I think of hindsight bias as being a big problem. There have been many other FOMC days where traders have maybe come in with an idea of what could have happened, see it play out, and then get really pissed off. And then, the next time you kind of have that, let's say, belief, it's easy for the hindsight bias to start to kind of turn into foresight. But that foresight is a bit kind of wishy or hopeful. How do you see that? And maybe we'll start with Deli here in this one first. How do you see traders, being a bit kind of wishful or hopeful on days like today?
They think that volatility in the market is always good, and there's a difference between good volatility and I would consider erratic volatility. When it's volatile like it was last week, or talking about Kane was talking about from 22K down to 19K, it's like he had reasons why he believed it and we got volatile. So it's like we take advantage of those times. You come in today and you miss one thing that Powell says in a presser, and it's a ripper the other way, and you have no way to react to it in real time because the machines are just too fast. And so you're basically to me it's almost all luck, because in a situation where we are in today's markets, it's news travels at the speed of sound, right? And so there's no way he or I or anyone can just go, oh yeah, we're in a key level now, I'm going to get in. And so really you're not building any skill. You're just going in there and you're hoping for the best, right? And so that's where I think the mistake comes, is like understanding different environments when it's volatile. Most new retail traders think that equals opportunity, but it's not necessarily the case. I mean, that's the first thing that comes to my mind.
Can't help it for you.
I purely just look at it as gambling, right? Like I just share the same sort of thing, like playing any sort of news. It's like if you truly believe that, even I've seen it sometimes where FOMC prints that NQ should rally and it just dumps because he said the wrong thing at the presser, right? And it is just literally that, and then the next day it corrects or whatever. But I've just know over periods of time, sure, it feels great when you're in a trade, and I spoke about it earlier. There have been times where I'm like, oh wow, it's 10:01. Okay, look at my trade, and it just absolutely crushed to my TP. But it's like I've also done it the other way, where it's crushed to my stop loss and slipped me out 10 points. So I just don't want to be, I don't want to be positioned in the market. It just absolutely skews my probabilities and my edge. And if it does that, then I'm really cheating on my system, and I'm just gambling money, which I just can't do.
Yeah, I think the gambling.
And
yeah, go ahead.
I just want to say one quick thing, and I want to go to you for sure. And what Kane said is so true. Is like you could even know what the news is going to be today, and you could still be wrong about what happens.
Yeah,
and that's the truth of it. Powell could say we're doing nothing, and then he goes good afternoon, and it just goes rip, and it goes lower, and you're like, dude, what happened?
Yeah, he wears a green tie for the first time ever, and the market just rallies 1,000 points.
Remember, I mean, the Bernanke briefcase and all the different things. Always got it in his left hand. We're going higher.
Yeah, exactly. Yeah.
Yeah, and that kind of gambling, I think, gets I will say kind of reinforced by the false feedback in the short term, right? It's like, why do people love playing the slots? Why do people love going to the casino, going to buy lottery tickets? Because it reinforces that kind of inner wish that trading could be that easy, that you can make money, sometimes infinite money, like immediately. And I would say in some respects, to truly become a skilled, profitable trader, you have to kill that wish. You have to kill the part of you that hopes for certain outcomes, right? That in a larger society is not that consequential, right? You can hope for certain things that are beyond your control, not that big a deal. You hoping for outcomes here, to me, that's a surefire way to know that you are actually gambling. And I'd say that some of the viewers here don't necessarily know that. So if you have thoughts in your head about hoping or wishing for outcomes, make the link that that's you trying to gamble here. And to become a skilled, profitable trader is the antithesis of that. You're trying to become the house. The house has no hope. The house's only job is to keep getting butts in the chair to get their customers there because they know it's a probabilities game over the long term, which you both have talked a lot about. Uh, I think another big issue on days like today, and I think one that really does drive a lot of FOMO, is revenge trading. Sometimes the FOMO is not really the fear of missing out. Sometimes FOMO is actually the mind's way of kind of manipulating you into seeking revenge for prior losses, and maybe not even necessarily recent ones. It could be a longer track record where you're actually in a bit of a hole. You've lost money in your own accounts. You've lost money in some demo accounts or some combines, and you're looking for today to kind of make up for those past losses. Have either of you experienced that, both personally, where you can kind of feel the increasing itchiness of some of those past losses, kind of compelling you, and seeing the way that your mind can kind of manipulate present market data to retrofit into an idea that seems justified in the moment, but in retrospect, it actually was quite dumb.
I'll start this one. Yeah. 2 weeks ago, my copy trader absolutely tore one of my accounts to bits. I lost like 10 grand in no time, right? Didn't copy any of my stops, nothing, and just opened it up, boom, minus 10K. 3 days later, I approached the chart like Monday, and it's just like, got a gut feel we go to Asia High. I'll load that account up. Asia High is 10K. I'm like, why am I sizing this way? Oh, because it makes up for the loss. And the loss was out of my control, right? But I'd sized my trade based on one, gut feel. The model wasn't there, like it was kind of trending. Sure, played out in my favor, great. But the sizing was completely to reattribute the loss that was out of my control to some degree, right? And I'm a big advocate of journaling my losers. Don't typically journal my winners because it just skews my data, and I like to just keep my losers all compact. And I journaled that one as a loss despite winning because I fully emotional trade. And it was just like, I just wanted to recoup the loss of that specific account because I should have lost a couple of $100, maybe a K. Instead, I'd lost 10. Do you know what I mean? And it was just a massive loss that I didn't want to lose. So, yeah. And how do I combat that? Typically, if I feel like I'm over trading, I'm trading too much, I will just leave my laptop, leave my studio, go downstairs and go out. And sure, I can go on TradingView on my phone, but I normally just go around put myself in a coffee shop with someone that it's rude to sit on my phone, put myself in a situation where I can't do it because I do have those tendencies to pick it up and be like, oh, then my ego is kicking in, So I just don't do it. I just put myself in situations where I can't do it.
Yeah, I absolutely love the fact that you treated that as a loss.
Yeah.
Trading is such a hard game, and it's so hard because the false feedback you get in the short term. But when you know that you've made mistakes, it's a sort of irrelevant as to what happens in the outcome of that trade because you've got to be better at it. And yeah, I think the tactics you've described here are quite sound. Deli, as we come to you here, I'm really kind of curious if you can kind of precisely describe the mental manipulations that occur. I mean, Kane talked about how it was, from a sizing standpoint, but even just kind of perception of price action or the way that you interpret certain indicators that you're using. How have you noticed over time, and maybe not recently, but how your mind can get manipulated by past losses?
I think as traders, we think we see too many edges, and we don't have that many. And so I think that where I make a mistake over and over again is very similar to what Kane said, is you get into a situation where, intuition or gut or, looking at a scenario going, yeah, we're going to go there. That's where I get into the most trouble, right? For me, is thinking I see too many edges when there really isn't that many out there. I mean, that's the mistake I've made over and over in my career. I always think I'm smarter than I am, even though I don't think I'm that smart, right? But that's just what happens for me, is that, it's amazing to me how much a rhythm matters for me. When I'm making good decision making, then it's contagious. When I start making bad decision making, it's contagious. Or if I make a mistake, how then the next thing I do is really the most important decision for me, right? And so go back to what happened with Kane. He did nothing or something happened to him the next time. It's like that next move is really the one that impacts you even more than the initial one, because the initial one's like a shock and it's like, okay, you almost can get past it, but it subconsciously lingers. And the next thing you know, you get in a situation where, boom, you're doing something else that's led from that. And I think that's why FOMC is such a popular day for traders, and why we're talking about FOMO is because people, I think, dependent on where you are, a couple things happen. As one is, if you're struggling, you feel like it's an opportunity to get it all back. So that's number one. So you think that you see something that's potentially there. The other part of it is you've been doing well. You feel like you've got a few bullets in the chamber, and you come in and you just get blasted. I mean, so it's like, for me, I look back at my career, I've never had my best days on FOMC, but I've had a lot of my worst ones on it. And so therefore, I've now trained to know that this is just not the great day for me, because at the end of the day, I've never taken, good decision making and continued through in an FOMC, and goes back to what, there's no skill being developed here. You're not going to go back and look at your model and say, this was a day that this really worked well. It's a luck day. And so, that's kind of where I am with that.
Yeah, I think one thing for viewers to kind of maybe take away here is you both have kind of described patterning that exists internally for yourselves, right? We're always kind of looking at market-based data to identify the edges, but my work centers on being able to generate the same kind of internal data to be able to identify where your edges are and where they're not. And so one of the tools that I use is just called a data collection worksheet, where you're actually writing down in real time on a piece of paper, in a Word doc, the thoughts that you're having when your emotions are starting to kind of rise, or the perceptions of the market, perceptions of price action, perception of, positions that are open, that are kind of deviating from an optimal, right? Rise in emotion, maybe change in your posture, change in your actions or your behaviors. All of that internal data can be used to be able to differentiate those times when you are probabilistically going to make a dumb decision, versus probabilistically, actually, there is real intuition here. There are distinct markers that exist that tell you when, that feel or that gut is more likely to be accurate than not, right? And for a lot of my clients, when their intuition is correct, there's far less, internal noise and chatter. There's no tension. There's a sense of just like something making sense, as if the market just kind of handed them this idea. Something comes to them, versus the very kind of strong mental activity and the emotions and the stress that's often kind of bringing you into the market. You're bringing that bias into the market. So, very, very simple task to do, one that I strongly advise all you watching to do. Start keeping track of this data in real time, and be able to firmly distinguish those kind of internal markers. Both of the excellent traders here have that, but they've developed it over a long period of time. You can accelerate that process by just doing it a bit more consciously. So I would say that also that task is a way to help bring about a bit more mental clarity. Kane, you kind of alluded to this, prior to the segment here, about just kind of getting out of paying attention to the price action within this trade. There's nothing left for you to see here. You're happy to kind of get along and answer questions in the chat because there's nothing more for you to do. So creating that mental clarity is a very, very important thing for traders to do. I think that a lot of times there's this sense that you just kind of have to be glued in at all times, but you're constantly absorbing information. And much like a sponge that becomes oversaturated, your mind becomes cloudy, and then you become vulnerable to making mistakes. So What are some other ways that, both of you kind of help to generate that mental clarity, both from an intraday standpoint and maybe, kind of in your routines outside of trading?
I want to go to Kane
I
here, but we've only got about 30 seconds left, Kane. And then
Okay.
after you, we'll wrap because we've got
yeah, I'll
Fabio and
summarize
Jim.
quickly.
And so yeah, okay, Kane, all you.
I just limit my trading hours, and outside of trading hours, I just try not to look at the charts. If I need to look at the charts, it's normally to answer a question or for one of my students, one of my mentees, something like that. But it's always on past data, or I just use the replay tool so I can't and immediately stop data printing so that I can't be interested in how price is printing, because there have been times when I've 4 or 5 years ago where I'd be teaching someone and then I'd be like picking up my phone, trading with my phone, have a laptop next to me to trade it. It's just like I'm doing another job here and it's just too much. So I just limit the amount of live data that I'm reading, which is literally, as I said to you, when before my segment, as soon as I'm break even, like I would have just got up and went downstairs and gone out and watered the grass, like something like that. It's like I don't want to look at it. I won't look at it. Lock trading view on my phone. I'm gonna have to really go out of my way to look at it at that point. So, yeah.
Right.
We'll end it there. I couldn't have said it better myself. I think what happens to me is I'm such a busy person. Like literally, I look at my calendar. It's pretty much busy almost 7 days a week, to be honest with you. So it's like that's when I get in the most trouble, is when I'm doing something else and I'm trying to think that I'm able to manage two things at once again, thinking I'm smarter and I could do more than I can, but I know better. So Kane, I got to tell you first with you today. Absolutely loved it. You killed it. I can't wait to have you back next week again. It was awesome. I appreciate your time so much. Everyone go check out Kane on Twitter at _Trader Kane, and go to the lab and you could see more of Trader Kane on a regular basis. Dude, it was awesome. Thank you so much.
Appreciate you. Just to summarize, I got stopped break even on my trade, $40 profit. We stuck to the plan. It's a good one. So, yeah.
Thank you for that update. And my man Jared, that's right. When we come in next week, I don't know about that. We're might have to fight for that card. And my man Jared Tendler, listen, what you've done to help traders is just magnificent. I just love it. I love your book. I love everything you're doing. To have you on here as really the trading psychologist for the NinjaTrader Live Network is an absolute honor, and I look forward to more conversations. I think we had you, me, and Kane. We could have won forever. I think we do this again. I know you're going to have other guests, but this was awesome. Thank you guys both so much.
Yeah, appreciate it, Jared. Thanks, AC.
Yeah, thanks, guys. Great to see you both.
All right, everyone. Next up, we have Jim Cagnina, our senior market strategist, and we also have Fabio from MenthorQ. And don't forget, later this afternoon, we have at 1:30, Pax and Tanya trades are going to be in studio with me talking about pre-FOMC. And then at 2 o'clock, we have Tracy Shuchart going over the FOMC numbers with Tony Nash. And then 2:30, we have Jim Cagnina. He'll be doing another Edge report. And then we've got Order Flow Labs, Nick for a tick, and my man Leo. Leo's got good hair, but he's been wearing a hat. I told him, don't show off. I'm getting gray. I don't need to see it. Now Kane's got good hair. I mean, you know what? I look up there and I look like the Mad Hatter. I got one half my head's gray, the other half is dark. I don't know. I got all these guys with good hair around me now. That's a good thing. All right, Jimmy, over to you and Fabio.
All right, I am back. Camera issues worked out. I had a max headroom moment a little while ago, but we're all good to go. Now, before I introduce our very special guest, I do want to just take a peek at my screen really quickly here and just show a feature on the Edgeful software, which is really, really appropriate for today. For those of you who are using Edgeful, great. For those of you who aren't, you're going to be able to see it right now. So if we could pop up my screen real quick and take a peek. All right, I'm assuming oh, there we go. We got it up. Awesome. All right. So this is just really quickly here before we get Fabio in here. So this is the dashboard for Edgeful. And they have this report called they got a lot of reports, but they have one called FOMC. You can scroll down here and see all this stuff. FOMC performance, right? And so it's a historical peak of performance of the FOMC. So I just ran a really quick report, and I did a year look back, right? So I captured about 9 meetings worth of data, and I set it for one day before the FOMC, the FOMC day, and then one day after the FOMC. What's been the performance of the E-mini S&P? Now you could track any futures market really, but I just wanted to show this right now, and you'll see, pre FOMC historically we've had a little bit of a lift of about 0.14%. FOMC day itself 0.15, and then post FOMC day 0.32. You could set this for 2 days, 3 days, a bigger time frame if you want, and you could also reduce your look back, right? And I did that. I did a year-to-date look back from last meeting only, and this middle day was red. So this isn't every day past performance, not indicative of future results, but it's a really kind of handy way to kind of set your bias. So having said all that, I want to introduce the man of the hour, our very, very special guest. Fabio is with us. Fabio from MenthorQ, CEO and founder. Fabio, how are you?
Yeah, very good. Hi, Jim. Nice to see you. Thank you for having me. And congrats on the live stream this week. It's awesome.
Yeah, it's been a lot of fun. We've had, we just had so much talent here that just keeps showing up. A lot of these folks I know, a lot of these folks I don't know, and it's just been spectacular. And I've got to know you a little bit over the last several weeks here as you kind of walk me through your very feature-rich software that is integrated with the NinjaTrader trading platforms, and also there you go, and also your dashboard, right, and your Q score. This is really good. It's you have all sorts of good content here, and a lot of good gamma levels and things like that we kind of rely on as areas of interest. So I think I just want to start, like, where are you located, man? Where are you at right now?
So right now I'm in Madrid. I'm meeting with our team. We're planning 2025. So we're basically planning development for 2025. So we're going to be introducing a lot of new stuff. So stay tuned. We'll keep you posted as soon as we know more about it, for sure.
All right, well, give me a heads up because I scramble to learn your new stuff as best I can. So how did you come up with this idea? How did you get started here?
Yeah, so maybe, Jim, I'll give you like a little bit of my history, my background. And so basically, I joined finance in September 2007, so 2 months before the start of like the big crash. It was very interesting to see all that happening. I was in London, and I worked for a company called Bloomberg, which I'm sure everybody knows. So I sold data for most of my career. Bloomberg could be considered what we call traditional market data. So your fundamental, your news, your pricing, right? And then I moved to the US. So I had the opportunity to work with a lot of like big banks, big hedge funds. And then back in 2018, I actually moved to a startup that was actually selling alternative data to large hedge funds. So the concept of alternative data was new to me. It was very exciting. And basically like that made me understand how finance is changing. So what we see today when we talk about AI, when we talk about data, really started a long time ago, but only like large institutions were able to capture those strands like very early on and benefit from those. So I had the opportunity to work with really large organizations, speak to their data team and basically learn how they were using data to build quantitative strategies. So what you see today in the platform is basically my background translated into something that can now be bridge to the retail trade. So before, obviously, data was very expensive. Now data is becoming more of a commodity, but the challenge is that there's a lot of data and not many people know how to use it or to leverage it. So when 2020 hit, we were like, okay, like we need to start investing differently because all these like option flow came in. So we were started building our own models for investing using options. And then we decided really to post some of our charts on Twitter. Our Twitter grew really fast, and then we really turned the company upside down very quickly. And then now, obviously, what you see today is really like the end of a journey that started about 2-3 years ago. So yeah.
Wow, that's fantastic. The NinjaTrader Lab community is seeing a lot of your really important levels, including your jacks levels, your blind spots, high vol levels, zero DTE levels, when we do our edge report, and it's been very, very helpful. So I'm glad for that. But if you could start though, because this is relatively a new thing, right? You have a thing called the Q score.
Yeah,
Yeah,
absolutely.
could you walk us through the components of that and what they're measuring?
Yeah, so basically we started, as you mentioned, with gamma levels. So we turn complex option data into lines on a chart. So it's kind of like reinventing technical analysis in a way by using data that is very powerful. Because we know, of course, that options are becoming widely used. The volume of option has really, 2024 was the year with the highest daily volume, even more than 2021, which is when we saw the GameStop saga happening. So any trader that is really trading today, doesn't matter if you trade option, they should really understand how option can impact the price action. And that's why gamma levels come in, right? Gamma levels are really a support on your chart that can help you understand, okay, which is the area where we could see a reaction. And today we have some really interesting example on ES and Q and some of the other futures. But then the challenge is really like, as a trader, you come in and you have a bias, right? So you think the market is going to go up, you think the market is going to go down, but really the important part is to follow the data, and that's why we developed the Q score. So the Q score is really think about as a rating system, similar to when analysts create like a rating consensus for companies from 1 to 5, for example, when 1 is really bearish and 5 is really bullish. We came up with our own score by looking at different factors. So we look at 4 types of factor. The first one is option. Of course, we look at option activity and we try to predict if the option market is bearish or bullish on an asset. Then we look at volatility. Volatility is important because as a trader, you want to know not only how much money you can make, but also how much money you can risk. So when you talk, I see you talk a lot about ATRs and a lot of like these things. Like it's important to understand that if you are going into the market, you can expect a very volatile or low volatile market. Then of course momentum. So we use like a machine learning model that looks at a lot of technical indicators and will tell you if we are in a very strong momentum or low momentum. And then we have seasonality. Seasonality is actually very key because we are using the last 20 years of data to predict the next 5 days of price action. So we can show some really nice example as well on how the seasonality score, for example, could have predicted the recent drop and could also have predicted some of the upside move as well. So the goal is really to give you guys as future trader, as stock traders, a really simple visualization of what can I expect from today. So when you look at this screen, you're looking at the SPX. We see that we have a low option score. We have neutral on volatility, so the market doesn't really know what's going to happen. We have FOMC today, so we're obviously the market is really waiting for that. The momentum is very low, and then the seasonality is neutral. So right now we don't really have a clear signal, but we are also in negative gamma. So we know that basically, if we look at the chart here, we have a lot of like bearish positioning. So we know that it doesn't mean that the market is going to go down, but it means that the market could actually move very fast on one direction or the other one. So with the Q score, basically, we are helping you understand and looking at multiple factors that can then help you get a bias on the asset that you trade, whether you're future, whether you're stocks, ETFs, or indices. So we have it on all the assets.
So we're in a negative gamma situation. The textbook, as I recall, in a positive gamma situation, is kind of like sideways markets, right? Is that true, or am I misremembering?
Yeah, so basically what happens is that market makers tend to hedge differently in positive and negative gamma. So in negative gamma, they would sell when the market goes down and they would buy when the market goes up. So clearly that accentuates the move, but that doesn't mean that obviously if we're in negative gamma, the market is going to drop. It means that it's going to be very volatile because of the way market makers need to hedge when we are in a negative gamma. When we are in a positive gamma, we tend to see a better stability because of the way the market makers are hedging. So knowing, for example, the first thing I look for in the morning is the gamma condition. So if I'm, for example, looking at a bullish trade, I already know that there's going to be a lot of movement potentially on one side or the other one. And then, of course, we created a Q score to potentially get our bias and maybe like understand what is the option market telling me. So if we look at here, we see that this is looking at what we call all expirations, which is really looking at the full option chain. And then basically, if we go to our multi-expiration, then we look at different expirations. So we want to see like the picture, if it's just overall tight on one expiration, maybe OPEX could be a big one. But here we see that in the next 2 days, we are kind of like in a negative positioning environment. We're looking just at SPX now. And also here we have our March 21st, which is very important, is the quarterly OPEX. So a lot of activity is going to be around there. And then, of course, we have our April 17th, so the next monthly. And basically, like by looking at that, you can already get a clear picture. So we're trying to make it as simple as possible. So when you see a lot of red, is a lot of negative positioning in the market coming from the option. So that obviously can tell you a lot about what could happen. And then, of course, you can also look, for example, at our matrix right here. So here is really a table that simplifies the full option chain of the asset, and you can see how much negative gamma we have in the next OPEX, so in the next expiration. So we have about 26% of negative gamma expiring on the 21st. That's going to potentially create some technical moves, whether that is not direction, of course, but it's basically could create a lot of technical moves after the OPEX, of course, when the gamma is released.
So it's kind of like a reset, right? We're resetting because we're having this big expiration on Friday.
Yeah, it's because the option will expire, and therefore all the hedges that were in place on those options don't need to be there anymore. So normally we see the OPEX effect maybe the next day or the next couple of days, where you have those technical moves that are simply caused by the fact that market makers are really either closing their hedges or adjusting their liquidity and stuff. Yeah.
So what happened? Let me ask you this. So if, let's say the FOMC, there's an FOMC meeting, everybody knows this today, and there's a huge surprise, right? There's a huge surprise. It's not likely, right? Most likely there's going to be no change in the Fed funds target rate. But let's say there's a huge surprise. How would that possibly affect what we're seeing on the screen right now?
Yeah, so first of all, we also have intraday data. So you could actually monitor by clicking at the top right here. You could monitor the change after the meeting. So we have about 9 snapshots per day. So we have something really cool, which is the JAX difference, which is really so as you can see, this is really the change in gamma from the pre-market snapshot, which is the snapshot that has the updated open interest from last night and the current timestamp. So we are now at like 10:30 Eastern. We are releasing the 11:30 snapshot. So maybe in 10 minutes, we're going to have that. But as you can see, basically from last night, where we were still kind of like in a negative gamma, we've seen an increase in positive gamma for about like 15, 20 million right here at these like strike prices. So this will change intraday and will tell you, for example, how market and participants are basically adjusting their position for the next day. But it's also like important to look at the macro trends. So for example, we've seen a lot of like large institutions like started going long from like a previous very big short position in treasuries to a very like very strong like long position. And here we can monitor, for example, our models. So we also build other quantitative models, and here we're looking at CTAs, which for those who don't know are commodity trade advisor funds. So they're like large quant funds that are using like price action and typically technical indicators to go long or short different underlying, and especially they focus on futures. So if you look at the 2-year treasury, like this was when CTAs were very short on the asset, and then suddenly now we've seen a really big spike, so a really big change in trend. This is looking at the 2-year, and then we can also look at the 10 years right here. So you see that obviously we saw like a massive down movement of CTA's positioning here, and then now we're back in maybe like in an uptrend on the treasury. So of course, looking at this kind of data, which is opposite what equity would do, is very important for traders. So looking at where liquidity is going is very key. And we also have them on the other. So for example, the CTAs are super bearish on SPX and Nasdaq, and that's why we've also seen a very, very strong down move over the last few weeks. So here you can see kind of like massive downtrend from the CTA's model coming on SPX and Nasdaq. So I think the key would be to look at obviously what Powell is going to say. We don't believe he's going to really reveal a lot of clear insights on, for example, how the Fed is going to address tariffs, rising inflation. But if a surprise comes, then it could be very, very strong for the market because, of course, the market wants to rebound. But of course, it really depends on the word of power, what's going to happen today, of course.
Yeah. So just going back to CTAs for a minute, commodity trading advisors, it's a regulatory category, and these traders and folks are typically speculators, right? So they're the opposite of what maybe a traditional hedger would do, take, hedging positions. They're actually trying to predict and go with trend.
Yeah, and I think that the cool part is that they're not leading indicators of where the price is going to go, but they tend to accentuate the move because they move a lot of liquidity. So if you see, for example, a CTA positioning to the upside, most likely the move is going to be strong because of the amount of liquidity that they can move. So it's not really like, hey, CTAs are going short, I go short and I make money, because it's not really a leading indicator, but it's more like an accentuation of the move. So the way we use it is we look at by looking at, or let's look at, if we believe the market is going to go up, let me see what CTAs are doing. And if they are short, then we are going against the market, right? So it's kind of like a confirmation and giving us additional data points that we can use in our analysis.
Yeah, I had a very, very brief moment in my life where I was a CTA way back in the day, but I didn't have your tools, so I was handicapped a little bit.
Yeah, and of course. And I mean, I think right now the volume that they move is going to be much higher than maybe what it was in the past, I think. So
Yeah,
so that's why we developed it, because we basically want to get actionable things that you don't normally have access to. So the CTA's model is something that a bank would publish. They would have their own model, but it's not really publicly available. But we feel it's very important because it drives a lot of liquidity. So.
Got it. So could you also explain a little bit, and this is as much for my benefit as everybody's. On my charts, I have blind spots that I plot. What's a blind spot and what goes into that?
Yeah, so think about it goes back to correlation, right? So we live in an intercorrelated market that can be driven by a tweet from someone, can be driven by something happening on the other side of the world. Think about when you trade like things like the Nasdaq. A lot of the percentage of the index is on maybe 5 or 6 companies. If you just look at the Max 7 on the S&P, it's like maybe 30% on the index. So whenever you have gamma levels by looking at the option chain of the index, this is important. But what if you could spot on a chart important gamma levels coming from the option data on asset that could actually have an. So for example, if I trade NQ, I probably want to know when we hit a strong core resistance on NVIDIA, or maybe like Tesla has been in the news. I would need to have multiple charts open, right? I would need to monitor the Max 7. I would need to monitor the VIX, need to monitor a lot of the different assets that are correlated to the NQ that I'm trading. So what we did is we created an indicator that does that for you. So you can plot it on the NQ chart, and basically that would do the analysis on the back. So we look at all these correlations and we would plot the levels that are key for you on the asset that you trade.
Yeah, that's okay. That makes sense. That's awesome. And you could set levels too, right? So there's up to 10 different levels, right? And I'm assuming like blind spot 1 would be the most important, and that, or the most impactful maybe. And then going all the way down to blind spot, I think 10, right?
Yeah. So we have 10. So what it means is that blind spot 1 would have a lot of different gamma levels in that area from different assets that are correlated to what you trade. So imagine that we hit a core resistance on NVIDIA and a core resistance on Tesla, and maybe one on Apple, that are all in the same kind of like pricing point, that's going to become very, very key. So that becomes more important. But that doesn't mean that the other levels are not as important. It just means that there are more like close levels on that blind spot level 1 that could have an effect on the NQ or the ES or gold or whatever you're trading. Yes.
Yeah, and so by knowing that, right? So as an example, the Nasdaq futures market, now you know what possibly is in front of some of the bigger companies there, right? That are going to affect that 100 basket of equities.
Yeah, and the goal is always the same, Jim. Time is money, money is time, right? If you don't have time to look, so looking at too many charts will basically take away a lot of time that could be important when you make decisions. So we are trying to help you get, with 10 lines on your chart, we are already processing gigabytes of data for you that are coming from that model. So you would need to really do the same thing and go and process a lot of data, spend a lot of time doing it. And of course, you might miss opportunities, or you might actually be on a trade when you're on the wrong side of the trade because you didn't count all the variables that could affect that position. Yeah.
Yeah, that makes total sense. So I've been using those a lot. My main go-to, of course, is the Jax levels. And today and I'm going to ask you this question. Today was interesting because we have the March contract, the March futures contract for the stock indexes, as an example, are going off the board. The June are the front month right now, and when you compare them, some of those Jax levels are different, right? And they would naturally be different, correct?
Yeah, of course, because the problem is that we have maybe one or two expirations left on the March contract. So there's not a
Yeah.
lot of really. So we have already, on our generic, we've already rolled to the June contract. Just because there is more data available, the March contract is coming to an end. So I think it's also very important as a future trader to understand the impact for investors of options. So think about, for index is cash settled, so that's not a big problem. But for commodities is physical settled. So there's not a lot of people that are going to take a risk in a derivatives using options if the contract expires in a couple of days. That's why, for example, for gold and crude, you only see levels that are further in the chain, because not a lot of like physical hedgers will take the risk of being assigned in a very short amount of time.
Yeah. Yeah. No, that makes sense. What I've been noticing recently, and I'll keep monitoring it to see if this is a sticky fact or just the paradigm of the market today. But in the treasury markets, I'm a treasury bond guy and a treasury note guy. Those Jax levels are real, and the high vol levels, those have been pretty good.
Yeah, I mean, absolutely. So here we have, so here we have the ZN contract. Yeah, and I think it goes back to where the institution are building positions. So they think, like, we call them market reaction zones, because when price hits that level, suddenly a lot of investors are going to either take profits, close their active position, and that becomes a reaction because of the way on the other side the market makers are hedging. So they are very, very important levels, and they tend to become very, very sticky. The high vol level is also very interesting because it's kind of like a lot of companies refer it as gamma flip. It's a bit more complicated than that. We use a different algorithm for that, but think about in simple ways when the market is shifting from positive to negative gamma. So whenever you are below the high vol level, you start seeing an increase of volatility, and when the price kind of goes above that, then it kind of like tends to stabilize. So it really acts as a magnet in many, many cases. We call it sometimes pinning effect, where the price really doesn't move from that level and it's pinned to that level because of the way the liquidity moves. So people are buying and selling at that level. Yeah.
Yeah, no, that makes total sense. I mean, just looking at the chart, I'm a line guy. I have lines all over my charts, but looking at this, you see you have put support for the zero DTEs, and it looks like perfect support.
Yep. Yeah, and this
Yeah,
is
so I've
exactly like a pinning effect. Like it's not obviously on the exact thing, but you see how the price moves like almost in a line, which is very interesting.
Yeah, now this market doesn't move that much during the day compared to like the treasury bonds, but still, I've noticed the same phenomenon in the 30 year, which has been very helpful to me.
Yeah, and then of course the levels are really great on the index futures, on the commodities, so crude oil or gold, they work really well as well because there's a lot of activity there. A lot of our users use them on copper. Natural gas is like one area that could be interesting, and of course you also have like soft commodities there, but I think there's probably less activity on those contracts.
It's okay. You're singing my tune with the contracts that you mentioned. We're constantly scanning these, talking about these, analyzing these, so it's particularly helpful in markets other than just the equity markets.
Yeah.
So that's pretty awesome. So, any sneak peek of things to come that you're willing to talk about or no?
Sure. We are working on European futures. So for those who are trading DAX and Euro stocks, we are working on getting that data. We are also working on crypto gamma levels coming from the spot crypto market. So looking at actual spot option, not just the future. And then we're also gonna introduce AI coming in the next release. So we're gonna like have a lot of new stuff with AI as well. But we also like started creating strategies. So I don't know if you saw when you mentioned a Q score, we actually have like strategies on our website that can also be looked at using the Q score. So on futures, on ETFs, on stocks, etc. So we're kind of like slowly starting to go into that route, like back testing, building some quantitative strategy and simplifying things, of course, for traders to be able to make more like accurate choices and stuff. Yeah.
Awesome. Well, keep up the good work. We're always looking at and the website is MenthorQ, right? It's not MethodQ, it's MenthorQ.
Yeah, with the age.
Yeah, you can see it right next to your name right there. Everyone, I recommend everyone check it out. So again, thanks for your time today. Enjoy Spain as much as you can. I'm jealous, and I look forward to talking to you again.
Thank you, Jim.
Thank you very much. All right, we're going to be back shortly, folks. I think 1:30 we'll be back streaming live. See you then.